got my target. We'll see what happens. Man, I don't. I'm the guy, Ron. I will call you. Look at that. Get through that one. You can take me out. I don't care. There we go. Out of that trade. Feel good about it. I'm the guy that'll call you and say I'm going to be 15 minutes late and then show up 5 minutes early. So I don't do well. Good morning, Em. And guys, welcome to the room. Welcome to Nexgen. Welcome to everything going on. Let me get that workspace off of there because that's just going to confuse you guys. And I'm going to get rid of all of the simulator stuff, and we're just going to look at some other charts today. Sorry. I appreciate your patience. Good morning, Nanda. I do appreciate your patience. Sometimes you just got to trade. Welcome. Good to have you guys. Morning, big dog. Crypto Farmer, nice to have you back. Jay, Nanda, Dan, Josh, Ron, T, Rob, Adriana, Andy James, Piper Puppy. Hey, Troy, good to see you in here. Jeffrey Dean, Big Dog, and Joel. All right, guys. Let's do some next gen this morning. Let's have some fun. Everybody can hear me okay? No worries. We've got YouTube rolling. I feel good this morning. Slept perfect last night. Hey, Josh. Guys, today is Thursday, November 14th. At 8:30 a.m., we had some news that finally shook the NASDAQ loose. I think it did the same thing for the S&P. What happens is when those high impact, those medium impact news releases come out, guys, the market can go nuts. It can just bump and jump and spike, change direction, all the things that you really don't want to have happen when you're in the middle of a trade. So a lot of people, myself included, choose to not trade into news. They just simply say, hey, guess what? News is coming. I'm going to go toast a bagel. At 10:30 a.m. this morning, guys, I'm sorry, at 11 a.m. this morning, we're going to have crude oil inventories. And crude oil inventories, if you're a crude oil trader, can make that crude oil spike. Crude oil inventories can also, if you're a crude oil trader, make the market kind of jockey for position before news. So be aware, get your management hat on. And then at 3 p.m., it looks like Fed Chair Powell is going to say something. And when he speaks, he's like E.F. Hutton. Everybody listens. And it can move the market. Hey, good morning, Zorro. You know, Zorro, I've got to tell you that every time I look at the picture on your page, I see you as Cousin It with all that long hair. I'm like, oh, it's Cousin It. And I know that probably that's the back of somebody's head, but kind of funny. Hey, good morning, Steve. Guys, I do this every day, forexfactory.com/calendar. This is part of my routine. There's a couple things that I do each and every morning. I clear out my stuff for NinjaTrader 8. I study what I did yesterday, and I check news before I ever think about taking a trade. Good morning, Sid. Everything that I'm going to talk about today, guys, can be found on the Nexgen page. I'm not going to hold back. I'm not going to give you every trade that you can possibly pull off with the software, but what I am going to do, and my promise to you, is that by the time you leave this classroom today, you will have everything that you need to be successful with this software. You will have everything that you need to have a trading plan that is consistent and profitable, and the only thing that you're going to have to do is learn how to work that plan. The trading guide is where all the answers are, really. This is the indicators, momentum, termination conditions, entries, understanding trades, management. I mean, gee whiz, it is everything. But the one that I really want to focus on first, guys, is that common phrases. Hey, good morning. Are you in Ohio, Jay? Is that like a generalization? Because somewhere there's someone in Cleveland mad at you. It's been a long time since I've been in Ohio. Guys, we are going to talk about, for this first hour, we're going to focus on just the weather. Yeah, here too, man. It's going to be 70 and sunny. Ugh, got to go play golf. Ugh. I think Pete said it best yesterday when he said, I love this lifestyle, guys. High probability trade. This is what we're going to talk about. The high probability trade. More specifically, the high probability trend trade. I know I do, Jay. Guys, this high probability trade, as we teach it in the room, this high probability trend trade, this is a trade that typically wins 70 to 80% of the time. That sounds way better than this is a trade that typically loses 20 to 30% of the time. Day traders hate to believe that losers are a part of the game. Guys, losers are most certainly a part of the game. What we're going to talk about this first hour in this high probability trade is making sure that you're taking the correct losers, making sure that you're taking the losers that are based in a pattern that has been proven to win more than it loses. And that's exactly what we're going to do with the high probability trend trade. Each indicator on every chart is going to agree with the rules for this trade, guys. And this is when the triggers are their strongest, no termination conditions exist, and there's no trouble spots between you and your entry target. We spent an entire hour taking this trade, the 3 rules that are part of it, where to find them, how to study them, how to implement them, and how to get into the market at the absolute best spot where the market is most likely to continue. Once you understand this trade, it opens the doors for the other trades. It begins to open your eyes to patterns. So we focus on this trade because of that potential win percentage. And confidence comes from the memory of success. And if you're being successful 70 to 80% of the time, guys, your confidence is going to go through the roof. And once you have that confidence, you develop trust. And once you have trust, that's when the plan is easy to follow. The most important thing that this trade does is it teaches you to read your indicators. That's my job. My job in this room is to teach you how to understand what the indicators are telling you. I love my job. I have a lot of fun on my job. Once you can read your indicators, guys, once you understand a few very basic concepts, you will understand where the market is likely to continue, where it's likely to go, where it's likely to stop. And this becomes entries and targets and reasons not to trade. 90% of your day, each and every day, is spent waiting. 90% of your day is doing nothing. 90% of your day is wishing that the darn market would give you your advantages so that you could get into a trade. I'm going to share this picture. I took it this morning. This was my morning, guys. At 7 a.m. I took a picture and said, I need this market to break out of this range. When we talk about rule number 2, you'll see how effective rule number 2 is in keeping you out of the market. Sure. So crypto, we're talking about the trend trade for the first hour every day. So the first hour every day, we're talking about that trend trade, the high probability trend trade. And then when we get into the second hour, when we get outside of this foundation that we're building, I would love to talk about momentum trades because momentum is such a big part of everything. So 90%, guys. At 7 a.m. I took a picture and I said, you know what? There's not a damn thing for me to do. I'm going to sit on my hands and I'm going to wait for it to break a range. At 8:20, I took a picture. An hour and 20 minutes later, I took a picture and I said, well, I'm still in my range and I still haven't traded and I'm not giving any money to this market until it gives me my advantages. So my chart reading is going to identify those advantages, guys. And there's 3 of them that I look for. There's 3 of them that you'll look for in the high probability trend trade. So crypto, when we talk about the trend trade, we're laying it down right here. This trade is nothing more than 3 advantages, and each advantage happens when the rules are true. So we're going to talk about strong triggers, and that's that momentum piece of the puzzle, and that's the one that's not only a part of this trade, but works itself into almost every trade that you take. No termination conditions, no likely to stop areas, the second piece of the puzzle. This is going to give you room to your profit targets. We're going to call it a clear path. So not only will we be trading with the trend, we will have the advantage of momentum and nothing in the way when we take this trade. And then finally, the entry order or the entry rule gives us that point where the market is most likely to continue. And that's the bounce point so that you can trade with the trend. These 3 rules happen on only 2 charts. I went dark mode on my computer. It's throwing me off. The first 2 rules can be identified on the most current bar of the large chart. The large chart's a very broad stroke of a brush. It's a slow-moving chart. It's difficult to see change, which means that your advantages tend to hold a little longer on that large chart. This shows the overall opinion of the market. Your first 2 rules, momentum and clear path, those happen on the large chart. And I'm going to tell you right now from experience and 5 years of training you guys to do this, Once you believe in momentum and a clear path, it opens the doors for almost everything. Those two advantages alone, never getting off the large chart, are enough to build a very consistent and profitable trading plan. We're going to use a smaller, faster chart when the rules are true to pinpoint entries. Guys, you're going to be able to pinpoint precisely where the market is most likely to continue with the trend that's been proven, established, and verified on the large chart. By using this refinement chart, we see 20 to 30 bars inside of this one bar. And we use that to buy or sell pullbacks at areas, and it really reduces risk and it gives us the opportunity to maximize our profit potential. That's rule number 3. I love this picture. I get excited every time I share it. Who am I trading with? Who am I trading against? Guys, your large chart, I want you to think of it as a large crowd. The people with so much money that you can't fight them, you can't beat them. When they say up, it goes up. When they say down, it goes down. They are going to define the direction of the market and which way you should be looking for your rules to be met. They're going to define the momentum in the market. They're going to create it. You're going to be able to identify it through rule number 1. And these are the same people that react at those key areas. And there are key areas on that large chart where areas are defined. These people make decisions there. They enter trades. They exit trades. They fight. The buying big crowd and the selling big crowd fight one another right at these key areas. You're going to know about them. You're going to see them. And you're going to understand how to not trade into them. Once these guys give us everything that we need, the small crowd tends to walk in the room. They have more money than you. They don't care what you want to have happen, and they push. They push against everything the large crowd wants. The large crowd beats them 70 to 80% of the time. The small crowd fails up to 70 to 80% of the time, guys. You're going to use entry rules to pinpoint precisely where their failure is most likely to happen. And if they're losing 70 to 80% of the time against the large crowd, and you're trading with the large crowd, guys, this entry gives you the potential to win 70 to 80% of the time. That's where the confidence comes from. So this class is the same class every day for the first hour. Every day. Repetition, 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 guys. Isn't it funny that I said repetition repeatedly? Oh, man. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to talk about each rule individually. We're going to look at it on a chart. We're going to look at it in pictures. We're going to talk about what it means to us in terms of advantages. I'm going to give you a way to study it that is the most effective way to study it. And guys, we're going to learn these rules for when it's okay to trade, because what I really want from you is this commitment that the only time I'll enter a trade is when my rules are met, when the advantages are present. And if the advantages aren't present, guys, it's okay to sit on your hands and do nothing. That's 90% of your day. You guys simulate, practice, take trades, go long, go short, move stops, move targets. Practice, practice, practice. But what you need to do in the first step in becoming a confident trader ASAP with this software is post in the room, guys. Give me the pictures of what you're doing. Because what you're doing, sometimes it's right and sometimes it's wrong and sometimes it's beneficial and sometimes it's counterproductive. There's no reason for you to understand why in the very beginning. So every time you post in the room, you get a private session with me. I'm going to click on your chart, I'm going to look at your picture, and we're going to go back to those 3 elements: momentum, clear path, and entry. If you're doing things right, virtual high five, gold star. We're going to celebrate every victory that we can find on that chart. But if there's something going on that could deter your success, whether you won that trade or not, if it's something that could be harmful long term, we will identify it. If your entries need a little help, we're going to identify it and work on a plan to fix it. If your exits could use a little assistance, we'll address that as well, guys. Every time you post in that room, you get 5 years worth of knowledge out of me. You get patterns that I see, that I recognize, things that help you, things that hurt you. And I'll give you everything that I have in my arsenal every time you post in the room. We're going to simplify this morning, guys. We're going to keep it 3 rules on 2 charts. Learn to read your indicators. And the key is you've got to know what it looks like. You've got to know what these advantages look like so that you never hesitate when they're present. That's where the second piece to becoming a confident trader ASAP comes in, guys. This is the spreadsheet. The spreadsheet is downloaded on your computer, Nexgen Study Picks folder, every time you download software, whenever we load you with the software. There's 5 tabs on it. 4 of them are functional. The first tab is your trade journal. Everything that you do, win, lose, or draw, you should take a picture. You should annotate that chart. You should talk about your advantages. Whether you won or lost, keep tabs on this. It's okay. But the most important thing you're going to do is you're going to take the feedback from class. You're going to take what was said about the trade. Maybe it was the perfect trade, and we just need to remind yourself, don't ever miss this setup. Maybe there was a mistake made going into a trade. Maybe you confused a couple rules. Guys, I'm going to give you that feedback. And your job is to come back every morning and study your trades. This has become just a huge part of my life. Every day, guys, and I'm 5 years in. I still go back and I look at what I did yesterday, which means that I have to take pictures of losers, which means that I have to take pictures of early entries, of late exits, guys, and I've got to go through and annotate that chart so that I correlate that lesson in my brain. Because what I'm doing is I'm asking myself what worked, and I'm asking myself what didn't work. And the things that work, that feel easy, that keep me relaxed, that's typically when I'm adhering to my rules and having those advantages. Things that feel forced or make me nervous, and guys, you know that this is true. When you break your rules, you feel nervous. When you feel nervous, you move your stops. You adjust your targets. You change your plan in the moment based on the emotion that you feel in that trade. And what we're trying to do is train our brains that all it is a pattern, that if I take it 10 times, I'm going to win 7, lose 3 most likely. And I become okay with either result always. But if you study every morning, you will see the patterns that are bringing you success. You will see the patterns that are taking those success away from you. My talent, and I don't have many, but this is one of them, guys, is I'm going to see the patterns in you. I'm going to recognize your tendencies. I'm going to see what rules you tend to break. I'm going to understand if your management plan is based on hope or rational thought. And my promise to you is that we'll work together to fix it. All you have to do is show me what you're doing. This is going to accelerate the learning, guys. This is going to set you up. This is the 101 tab. This tab is 3 rules: strong triggers, clear path, entry area. This is what it looks like individually. You're going to learn them individually so that you can build them into a trade. Weak triggers and termination conditions are what it looks like when your rules are not met. And if your commitment is that I will not trade when my rules aren't met, it's imperative that you know what each looks like. Not only the rules met, but also when it's not. There's the client trade section. Over 400 pictures of you guys using the software. I probably need to take a day and edit some of these out. Some of them are broken. There's the high probability trend trade entry. There is the entry long, the entry short. Guys, there's the most mechanical plan I could ever create for the brand new user that is designed 100% to help remove emotion and get you paid. And then you're going to grow and you'll take pictures of when you can hold longer, when you should get out sooner. You're going to see patterns that repeat themselves every day once you read your indicators. Some of them are going to set you up for the next trade that you're going to take. Some of them are going to keep you out of these situations that, as alluring as they are, the pattern says don't do it. So I want you to take the favorite looks section and fill it out and make it look like the client trade section. Fill it out with your pictures, with your annotations. Make sure that you're talking about what you see every day, but post in the room. Don't rely on yourself. And self-reliance is a wonderful thing. Don't get me wrong. Everybody needs a coach. Everybody needs a mentor, guys. The top players in the world, and no matter what sport it is, have coaches. And coaches sit on the sidelines and watch you perform. And it would be ridiculous to have a coach, somebody that it's dedicated to your success, and refuse to invite them to your game. And when you don't post in the room, guys, that's kind of what you're doing. So we're going to learn rules. That's the whole goal in the beginning. Why? Because rules are patterns that have been proven to win more than they lose. That's what we call having an advantage or an edge. We're going to look at them individually. We're going to talk about them. You're going to be able to study them. And then we're going to turn them into a trade when we have them all together. But we're going to start with strong triggers. Momentum in a clear path, entry area, that's the recipe. We're going to get the first piece of the puzzle. So crypto, here come the rules for the high probability trend trade. Large chart, the big chart, the slow moving chart, right? It has to have strong triggers. The large chart's going to define the trend as well. Hey, good morning, Erla. If your large chart background is green, the market's going up. The big crowd wants it to go up. You're going to look for rules to be met for high probability trend trades long. If the background is red, the market's going down, you're going to look for rules to be met for high probability trend trade short. Pretty simple. The only way that you can have strong triggers in an uptrend is if your small triggers and large triggers are green along with the background. So the look is that your small triggers break up and above the large triggers. The large triggers are widening, guys. Flat triggers don't boogie. Somebody said that once and it's still in my brain. Flat triggers are not full of momentum. But when they're wide, that's that strength growing. When your small triggers break above the large, when there is space between the small and large, guys, the odds are favorable for the market to continue up. Odds favorable momentum. That's what we talk about every day. In a downtrend, background's red. Small triggers are red. Large triggers are red. Don't get sucked in when they're still green. Make the colors match. And then that space created between small and large lets me know that the odds are favorable for the market to continue down. Guys, odds favorable momentum is our battle cry. You're going to see it annotated on charts. You're going to hear that phrase all day long in my classroom. And then when those small triggers work their way inside of the large triggers, the space is gone. This is weakness. This is a slowing of the trend, guys. And when I have weak triggers, anything can happen up or down. Strength, weakness, odds favorable, anything can happen. Guys, when you have strong triggers, the market is likely to push in the direction of the trend. When you have strong triggers, that's one of the key factors for breaking these key Fibonacci areas. And guys, when you have strong triggers, you're going to buy Fibonacci support or sell Fibonacci resistance on that smaller, faster chart. When you do that, it looks like a tail in that one bar scenario on the large chart. What's going to happen with these three rules, three advantages, is you're going to be able to pinpoint precisely where these tails are most likely to form, and these are going to become your entries for the highest probability trend trades. So, rule number one is strong triggers. Let's see if we can find some strong triggers in a live market. Oh no, my live market crashed. I draw on my charts so much, I crashed NinjaTrader too much. We'll come back and we'll look for it. But let's go to rule number two, guys. Rule number two says, whoops, there it is. It's crude oil. We'll find some strong triggers. It'll take 2 seconds to load. There we go. How easy is that? Small's above the large, large or wide, angled in the direction of the trend. The market pushes up. Smalls work their way inside of the large, even right at these key areas. There's a giant retracement that would have killed us in a long trade. And then we get strength and it goes up, they return, it goes down. And now on the most current bar, they're trying to decide, are we going to let those small triggers get above the large? Until they do, we do not have odds favorable momentum. Can you guys give me a why in the room if you're with me? That's not a tough concept. Strength is pretty easy to recognize. Large, small, separation. Guys, that's the one. Once you have it though, there's got to be nothing in the way. It's silly to take a trade if you don't have room to your profit targets, because the whole goal is to reach profit targets. So rule number two says termination conditions false. No area is likely to stop the market, guys. Termination conditions are, let's use this a little bit today, have some fun. Termination conditions, straight from the instructions, are Fibonacci-based indicators that may reverse the market. And this is based on a comparison between the Fibonacci area and the T3 trigger strength and location. So termination conditions are horizontal lines on your large chart. That's it. If you see a horizontal line on your large chart, it may stop the market. It may create a bounce. It could reverse it completely. The reality is, guys, is we never know what it's going to do, but there's a recipe. There's a pattern that you can recognize that tells you when it's more likely to hold than break. So We're going to use magenta lines at the high. These are divergence lines, meaning that the market went up, and then the sellers stole all the momentum from the buyers and pushed it down. This pink line prints, and it becomes a line in the sand, taunting the buyers to try again. When the market goes down and up, and the buyers steal all the momentum from the sellers, it creates this cyan line, and this cyan line behaves as a line in the sand. Just triple dog daring the sellers to try to get down there to do it again. There's Fibonacci resistance, the red lines, Fibonacci support, the blue lines, yellow 1-to-1s, those yellow dots. Guys, all of these areas can stop the market. All of these areas can cause reversals. All of these areas can cause very untradeable bounces. So, these areas are where decisions are made by the large crowd. So in order to understand whether or not one of these lines may stop the market, we're going to let the large crowd get there. On the large chart, we're going to let your price bars push all the way to Fibonacci resistance. When they get there, the only thing that you have to do is ask yourself, where are my trigger lines? If your trigger lines remain below Fibonacci resistance, or above Fibonacci support when price reaches it, ladies and gentlemen, you have an area that may stop the market. This is an area that can create an untradeable bounce. This is an area that might break, it might reverse it completely, and I want you to accept that you will never know. You will never know what's going to happen at that line. You could guess, you could use your indicators to have an opinion, but you'll never know. So when price reaches resistance and the triggers remain below, guys, no more trades into that area. Sit on your hands, do nothing. Price reaches support, triggers remain above, sit on your hands, do nothing. And what you're going to find through just a little bit of study is that these areas work. Resistance, support, support, resistance. Triggers don't break. Support reverses the market. Resistance reverses the market. Holy smokes. Right off resistance, support holds. Guys, go back and take some pictures. From support to resistance to support to resistance, and then it finally breaks. Rule number 2 is designed to keep you out of trouble. Rule number 2 gives you the ability to understand where the driving forces in the market are likely to make decisions, guys. So if you reach an area, the triggers don't break, sit on your hands and do nothing. Let's wait and see. Is it going to break? Is it going to roll? Is it going to fight? Guys, if it breaks, it looks like this. Price reaches Fibonacci support. All the triggers remain above. I sit on my hands. I do nothing. I'm patient. I'm waiting for this clear path. Once my smalls and my large triggers get below Fibonacci support is broken. My path is now clear until I reach the next line. If I reach resistance, my triggers are below. I'm calm, I'm patient, I'm okay with the wait because I know that I'm going to spend some time waiting. Once the small and the large get above resistance, guys, my path is clear. My path remains clear until I reach the next area. So there's this moment every time you hit a line where you're going to pump the brakes, guys. When I talked about understanding where the market is likely to go, these lines are outstanding targets. And then you just have to be patient for a minute. Is it going to hold or is it going to break? Hell, I don't know. Let's wait for the triggers to clear. And what you'll find is that support begins to behave as resistance. And resistance begins to behave as support once the path is clear. So let's see, once again, let's go to the market. And let's see if we can find an example where, which boxes are we talking about? These boxes? Crypto, this is me showing you from the point of termination condition until it becomes a clear path. So all of this action in that box, I just put that for the visual. This is where you wait. This is your patience. This is you saying, you know what? I need a clear path. Let me let the triggers get below. And that's exactly what this shows. Price reaches resistance. It's just showing you the break, getting to the other side. Does that make sense? So when it hits here, nothing to do. When it clears over here, let's look for shorts. That's okay. It takes a minute. So let's go through on the live market and let's look at the whole process. Actually, let me talk one more slide. And then crypto, we'll back it up and we'll either go to crude oil or S&P And we'll kind of do a full lesson what it looks like in the moment. Cool? Man, be vocal. Keep doing this. You're going to make me teach the best class ever today. And new users, this is your class. If I don't get to charts until 11, who cares? This is your class. So, once you get this concept of no trades into the area or the area is broken, it opens the door for the second trade that you're going to get a plan for, guys. And it's called the 50-50 trade. And the 50-50 trade is nothing more than taking a trend trade based on the potential of an area to break. And it looks like this. When the small triggers break through an area, but the large triggers haven't quite made it. 50% of my triggers are through, 50% are not. Guys, this look is dependent on odds favorable momentum. This is just the potential of areas to break. And areas always have the potential to break with this look, but it's never a guarantee that they will. So if you take that trade, your path isn't clear. And if your path isn't clear, rule number 2 is not met. It's not a high probability trend trade. It's what we call a medium probability trend trade. All right, so let's go do some work. Let me find a good look for us. I want one with odds favorable momentum. All right, here we go. So starting on the left side of my screen. And just for grins here, crypto, this is the area that we're going to talk about. 6,004. Actually, you know what? Yeah, because, let me show this. Because sometimes areas are going to be stacked. Sometimes you'll have 3 in a row. And you have to sit tight. So that's exactly what we're going to look at right now in the live market. Well, we backtracked a little bit, so check it out. Everything's coming up. Boom, boom, boom. There's another bar. And I hit Fibonacci resistance. Price reaches an area. Where are my triggers? My triggers are below the area. Absolutely no trades into 6,000, guys. This is an area that may stop the market. It may create a bounce. It might reverse it completely. So now I'm in that 90% where there's nothing to do. And the market goes up. And damn it, I hit another area. Well, now I'm starting to get frustrated. That's 2 areas in a row. I've been watching this market for 38 seconds and not a trade has produced itself. This is some crap. Nexgen, I'm tired of you. And then it goes up and it hits another area. And I'm like, seriously, how am I ever going to get paid if these areas never break? If all I have is line after line after line and that fear of missing out starts kicking in and you start texting your wife or your husband, you're like, that Mark is a crock of crap. He's selling me this sack of beans. And then the small triggers break above. And you start to get excited and you're like, wait a minute, I know this look. This is what it looks like when areas have the potential to break. When the small smash through and the large don't, I have the potential. And now I'm thinking, I'm going to look for a trade. If there's something that sets up, I'm going to look for it. And it just keeps going and it just keeps getting better. And then crypto, once my small and my large get above that final area of resistance, the path is clear. The area is broken. It behaves as support. And I'm good until I hit this next area. And then once I hit this next area, man, it starts over. And I never actually hit it. And it pulls back. But that's what it looks like when areas break. First, they're termination conditions. And then they have the potential. And then if they're going to break, they finally break. And we'll look for the rules to be met. And I'm telling you right now, the hardest thing that you'll ever do, crypto, you're going to learn these patterns inside of a week. You're going to be great. The hardest thing that you will ever do is absolutely nothing when there's nothing to do. The most difficult thing for traders is to sit on their hands. We're professional waiters. We're not day traders. And there's going to be times, just like we saw, where these areas are all stacked. And this is 90% of your day, guys. 90% of your day is being patient, waiting. And the cool thing is you'll get to a point where you take chances because you're a great chart reader. But until you're making money consistently, this says pump the brakes. Hold on. The futures markets trade trillions of dollars every day, guys. $220 billion an hour. $400 a day. If that's it, if that's the best you do is $400 a day, you're adding 6 figures. 6 figures to your income from only 400 out of a trillion traded each day. And then Rob, yeah, that is hurry up and wait, right? And for the blue collar crowd, that's hard to do. Because if you've ever had a job where you only get paid because you do work, it's hard to not do work because your brain tells you that you're not getting paid. So what's great about rule number 2, though, and what this patience really buys for you is, guys, Fibonacci gives you the ability. You literally see on your large chart where the driving forces are likely to make decisions. And rule number 2 can keep you out of consolidation. And rule number 2 can keep you out of chop. Guys, in 90% of your day, 90% of your day is waiting for those advantages so that you're comfortable taking the trade. And I'm going to show this picture one more time because we're talking about rule number 2. And crypto, I want you to see this. This isn't just me trying to keep you guys out of the market. Potential to break and didn't. Right back to support, right back to resistance, right back to support. And then from there, what did it do? Right back to the divergence low and support, right back into resistance. And man, this was an hour and 20 minutes of me not giving money away. And it wasn't an hour and 20 minutes where I had to sit on my hands and do nothing. This is an hour and 20 minutes of me not taking avoidable losses. Once you get that patience bone fine-tuned, change your world. Is everybody good on rule number 2? It's not a difficult recipe. Identifying termination conditions isn't hard. Let's go to the live market again, just for grins. Price reached Fibonacci resistance, and the triggers remained below. Does everybody see what the market did off of that termination condition? Pretty amazing, right? You didn't have to trade into it. You have rules to avoid that loss. Smalls are below the large, but they're not through the area yet. This area isn't quite at that potential to break point. But notice how that divergence high, that line in the sand, none of the triggers broke, and the market's pushing down. I'm telling you, if you scroll back and you begin to study these termination conditions, it's going to be difficult for you to feel the need to trade into them. Look at this. Support to resistance to support to resistance. And guys, there's that potential to break in one of those tails. Your patience paid off. That was probably a pretty nice winner. So everybody's good, right? Momentum leads the way. Momentum pushes the market. Momentum can break areas. Momentum can even cover mistakes that new users tend to make, guys. When you have momentum, it's hard to stop that market. Clear path means that you're going to have room to make money. It means that there's no decision-making points in your way, guys. Once I have both of those, I want to get in. I want to enter the market. I want to take advantage of that momentum and clear path. There's one more instance that'll keep me from taking that high probability trend trade. This is the only time on a small chart that I'll ever say, you know what, no trade. I won't take it. I have momentum, I have a clear path, but I refuse to enter the market. When there are 3 divergences, 3 losses of momentum in the same price range, it may terminate the trend. 3 cyan lines from a low coming off of pivots, 3 magenta lines from a high coming off of pivots. Guys, this is telling me on my smaller, faster chart that things are changing. This is showing me momentum being lost on my smaller chart. It gets more powerful when I have those anything can happen triggers, and even more powerful when my third pivot is higher than the previous from a low or lower than the previous from a high, guys. This is the only time my small chart gets to talk me out of an entry. This is the only time rule number 2 is not met on a small chart. So I have momentum. I have a clear path. I'm excited about taking the trade, and I just need to figure out where that small crowd is most likely to fail. Guys, I'm going to do that with such precision. You're going to do that with such precision that you're going to use a limit order to buy or sell a pullback, and that pullback needs to go to an area, a fib, a midband, or a yellow 1-to-1, and that area needs to be inside of triggers, guys. And we're going to put some pretty cool concepts together to pinpoint precisely where the market is most likely to continue. That was a big breath. We're going to buy or sell a pullback at an area inside of triggers, inside of favorable large triggers in the beginning. Favorable large triggers mean that your large triggers and your synthetic triggers on your entry chart, on your small chart, are overlapping one on top of the other. Large is smooth. This is native to the 5-1 chart. You'll use it with the smalls to gauge momentum. Synthetic kind of have steps on them. And synthetic triggers are nothing more than the large triggers on your large chart. Guys, there is this gospel truth when it comes to chart reading is that price returns to large triggers. Price breaks away and pulls back to large triggers. I think math people call it the regression of the mean because it's a moving average. So when price pulls away, a synthetic trigger is nothing more than, let's do it real quick. Let's show it. I love the questions. Thank you. So this is my large chart, and these are my large triggers on the large chart crypto. And one of the things that's true, and I want you to see this, is price tends to break away from the large triggers and snap back to them. It breaks away and snaps back. It breaks away and it snaps back. Breaks away, snaps back. And you see this pattern repeat itself over and over. Does that make sense? Well, on a small chart, it does the exact same thing. On a small chart, price breaks away from the large triggers and snaps back, and it breaks away from the large triggers and snaps back. So we use this to create entries. So your synthetic triggers are the large triggers from the large chart. And what we're doing is we're defining the range where the market is most likely to return, where those price bars are most likely to come back to. And when the large triggers, where they may come back to on the small chart, and the synthetic triggers, where they may come back to on the large chart, are in the exact same area, we call that favorable large triggers. So every time you're thinking about taking a trade, you're going to say, man, the small chart price may retrace back to the large. And those synthetics, the large chart may retrace back to these, and it creates this correction point from the top of the triggers to the bottom of the triggers. But the triggers only show you where the anticipation of those price bars to return is, the correction point. When we put areas inside of them, or when areas happen to be inside of them, fibs, mid-bands, yellow 1-to-1s, crypto, you're throwing a tennis ball as hard as you can. And you're not going to expect that tennis ball to ricochet until it hits something solid. Those Fibonacci areas inside of the correction point, inside of those triggers, are where we anticipate the bounce. So the triggers show me where price is likely to return. The areas inside of triggers show me where the market is most likely to bounce and continue with the trend, where the small crowd is most likely to fail. So, does that make sense? And that's why we use the large and synthetic on the small chart. It increases the accuracy dramatically. So when everything says up on the large chart and you're like, I need to find a long trade, and the momentum is strong on the large chart, and you're like, I need to make sure that there's no termination conditions, and there's nothing in the way, guys, nothing to create that bounce, that's when and only then do you turn your attention to the small chart. Your large chart has just defined direction, momentum, and areas. And you're going to see it somewhere right here. And that fear of missing out is going to grip hold of you. And that little voice, that devil on your shoulder, is going to say, Steve, dude, you're not getting paid. Adriana, there's no money in your account. Z-Robot, just jump in. What's the worst that could happen? Well, the worst thing that could happen is the small crowd shows up. The small crowd starts to fight. The small crowd creates a reversal bar. And that reversal bar is a loss of momentum, guys. Everything going up, this market is screaming. Once I get the reversal bar, once that bar finishes on the right side of the triggers, which is really the wrong side of the triggers, right, not left, guys, this is visually, this is a loss of momentum. This is a loss of momentum. So Rob, if you jumped in right here because of all that momentum, that's your giant red flag to pull the plug on that trade. And guys, when the rules are met on a large chart, that failed momentum is what typically turns into the trend trade. So loss of momentum, reversal bar prints, this is not your entry. This is the worst place to enter. This is where you look for those trigger lines, large and synthetic. Are they one on top of the other? Do they look like two snakes riding piggyback? Because those trigger lines represent the point where those price bars are most likely to return. And then you're going to say to yourself, trigger lines don't create bounces. They're just trigger lines. I need an area inside of trigger lines. And you're going to create a window of opportunity. God, that'd be the worst short ever, Rob. Your large chart says up with strength and nothing in the way. Why the hell would you go short? Because it might be a one down bar. You might not get your entry. That's what we call the path to financial suicide. Guys, you found your triggers, and now there's two lines inside. There's a mid band and yellow 1-to-1s. These are the areas where the market is most likely to bounce. You don't know which one it's going to be. Guys, do not rank the areas inside of favorable large triggers. Do not convince yourself that a mid band is more important than 1-to-1s. Don't convince yourself that 1-to-1s are less important than a fib. Guys, if it is a fib, a mid band, or a yellow 1-to-1 inside of triggers, it can create a bounce. Because the large chart has momentum, because the large chart has a clear path, you're going to activate a limit order a couple ticks above the highest point of support for a long trade. Because with all of that momentum, I don't expect the small crowd to get deep into it, but I know that the potential is there. I'm going to put my limit order 2 ticks above the highest point of support. Any line outside of the triggers, any line on the wrong side of the triggers, guys, this is the bottom. This is where I expect it to correct. Anything below that correction point is the wrong side of the triggers, guys. This is where the market shouldn't go. This is where your advantage is gone. This is where the edge is no longer with you. And guys, I don't want to be in a trade down here. Something has gone wrong. So in a short trade, the reversal bar starts the fight. It signals the pullback. It has me looking for my triggers. Once I find my triggers from the top and the bottom to the triggers, I know that this is where price is likely to correct. I need to find something bouncy in there, guys. And in this case, I have a mid band. That's it. There's no fibs. There's no 1-to-1s. There is one mid band. My window of opportunity, the point where the market is most likely to bounce, is one line wide. I'm going to activate a limit order, 2 to 3 ticks below, 1 to 2 ticks below, whatever works for you. And I'm going to say to myself, if the small crowd can push and hit my limit order, I'm going to be in this trade with momentum, with a clear path, having entered where the market is most likely to continue. Any line on the wrong side of the triggers is where the market shouldn't go. Any line beyond those triggers is not where I want to be. That's where my advantage is gone, guys. So when we talk about the high probability trend trade, when we look at a large chart, when we look at a small chart, let's see if we can find an example. I mean, there's going to be examples everywhere. This is pretty much a good one live right now in the market. I've got momentum. I'm getting the potential to break, guys. And even if this isn't the best rules met trade, price pulled directly back to resistance inside of a trigger, and that created the bounce. Do you guys see it? And I want you to see where the top of that bar is right now. Right on the pullback to the area of resistance inside of favorable large triggers. Guys, this is your pattern. Does it guarantee a winner? No. But what it does is it identifies where the market is most likely to bounce. It shows you where the market is most likely to continue. You know exactly where your stop has to go. Pretty cool, right? That's it live. I mean, that's a live bar going in. Once you can pinpoint where the market is most likely to continue, you understand where it shouldn't go beyond those triggers, right? And this is where your initial stops are placed, guys. There's an old adage, an old trading adage that says mature traders manage their risk before they ever manage their profits, guys. And there is nothing more true. You manage your risk by having a market where the odds are favorable for it to continue in the direction of the trend. You manage your risk by not trading into areas that could stop or reverse the market. You manage your risk by taking an entry where the market is most likely to continue, guys. Nexgen users manage their risk long before they ever put a stop in place. Your initial stop is where the market shouldn't go. 4 to 5 ticks above the trigger lines. Guys, I stink at math. Somebody help me out. If I'm trading a pattern that typically wins 70 to 80% of the time, how many out of every 10 of these that I take should I expect to lose? Anybody? That math escapes me. Took me 4 shots in college algebra. If something wins 7 out of 10 times, it loses 2 to 3. 2 to 3. So, ladies and gentlemen, you will incur losses. Ladies and gentlemen, you will lose trades. You will see negative equity. Trades will push against you. They will hit your stops. They will take you out. This intelligent stop minimizes your losses when it happens. Guys, losses are a normal part of a positive equity curve. I took several losses today. I'm still up money. The cool thing is that with all those advantages, more often than not, you're going to get one of these reversal bars. We call it a confirmation bar because it's literally confirming the market's moving in the direction of your trade. And then you can move your stop 2 ticks above it for a short, and you can move your stop 2 ticks below it for a long. Which means that even if it loses after that stop placement, it's not uncommon to see you guys giving up 30, 40 bucks a contract instead of 300 or 400. And Ron's absolutely right. There's 2 kinds of traders. One that takes losers and liars. Or that admit that they take losers and liars. It's like being in high school. There's 2 types of kids in high school. And forgive me if this is crass. The ones that swear they never masturbate. The liars. And the ones are like, yeah, sure. Right? It's human nature, guys. It's human nature just the same way. This is a normal part of a positive equity curve. But you've got to believe in your advantages so you don't put giant stops. Right, Rob? No reason to have a stop $500 in the distance if your advantage is gone right here. And I think this is one of the wonderful things that Nexgen does for us is that precision minimizes losses and those advantages maximize your profit potential. This is the best of the best, guys. Are there any questions? And remember, it takes a little practice, but are there any questions about the very basic concepts? Are there any questions about momentum? Momentum is just the separation between the small and the large. It's defined on the large chart. Termination conditions are lines on the large chart that may stop the market, that may create an untradeable bounce. Direction is defined by the color, guys. Once you have this, that's the best look ever. That momentum clear path, that's the best look ever. Entries on the small chart are pullbacks to areas inside of favorable large triggers. This is the best way to take the high probability trend trade, guys. This is the best look on the small chart. I'm teaching you the best looks, but this is not always the look. Let's be real. The market doesn't always play the way we want it to play, guys. Very often, you're going to see what I call split triggers. What's a split trigger, Mark? Well, it means that my large triggers and my synthetic triggers aren't one on top of the other like 2 snakes riding piggyback. What does that mean? That means that I have 2 spots where the market may continue. Is that a long trade? Crypto, is that what you're asking? Absolutely it is. Notice that the momentum is up and that the trend is up, and that little bit of red, that's that small crowd fight. And look at the entry on this one. Just above support, right inside of triggers. Momentum is there, everything is there, and this is the area where it bounces and continues. So we call that a long. Anytime you go short, anytime you go down with the trend, down with the momentum, that's the short trade. Man, I don't know that I can blow that up. This is giant on a 32-inch screen. On your, hit that full screen right down here. See if that helps you a little bit. You can also tighten that up as tight as it can go. You can hide these guys. you should be able to get a pretty big one if you pop out into the pop out. Let me know if that helps. But I can't, I mean, I'm not even sure that Control Alt, that's as big as it gets. This is a 32-inch monitor. This box is a 2-inch box in front of me. Try popping out into the pop out mode. If I'm looking for a long trade, if I'm looking to go up with the market, if I have the momentum, the path is clear, everything is good, and I look at my small chart and I see this look, those split trigger looks, my first voice in my head, or even out loud, should be that I've got 2 points where these price bars may return. Can you guys give me a why, if that makes sense? It may go to the large triggers. It may go to the synthetic triggers. I'll never know. It may bounce off of a mid-band. It may pull all the way back to Fibonacci support. I will never know. The only thing that I can be 100% confident of in this look is that my stop goes below the triggers where the market should not go. Everybody with me? When you have this look, guys, large chart's perfect, and it looks like this. This is where using one of those confirmation bars, where using one of those reversal bars is going to allow you to establish your risk if you take the trade from the highest level or the lowest level. Price comes back and reaches the area, creates a reversal bar. I can enter on the reversal bar. My stop goes 2 ticks below it. It doesn't assure me a win. It doesn't guarantee me a win. But if it comes back down to the second level, it gives me a small loss. And guys, I may have to take the trade twice. That happens sometimes. And you're going to see this happen probably more than you'll see the perfect favorable large triggers. This is a good example. The momentum is down, the potential is there, and everything says up. And I have areas inside of my large, and then there's that little split. And I also have areas inside of my synthetic. If I wait for the confirmation bar, I don't get run over at the lowest area. And you'll see this split trigger look a lot when you're at those early stages of momentum. So if I circle the tail here, let's see what it looks like. Scrolling on back. The momentum is up, everything's up, the potential's there to break, and it pulls back to the mid band, and it comes all the way back to the synthetic. Crypto, a confirmation bar. If I want to take a long trade crypto, and I'm sitting through all of these down bars to get to my entry, my confirmation bar is the first up bar. After all of those down bars, it's confirming that the market is moving in the direction of the trend and the momentum. So if I were looking for a short trade right here, and it looks like this, and I'm like, I'm going to trade that potential to break, and I say my triggers are split, I need a confirmation bar. Crypto, do you see how there is never a red bar in the direction of the trend? Not from the mid band, not from the fibs, not from the 1-to-1s. I never get confirmation of that move down, which means I never take a loser. That area had the potential to break, but it didn't. And I avoided the loser by insisting on a confirmation bar. Does that make sense? It's just the bar that goes the other direction. We call it a confirmation bar. Yeah, you're welcome. Because it confirms that the market's moving in the direction of the trend. I love it. So we can use that confirmation bar when our entry isn't perfect. We can say everything says up, the path is clear, life is good, I can't wait to take a long trade, but I'm not going to hope the mid-band holds, I'm going to force it to hold. And then you can take that confirmation bar. So guys, the easiest way to get to where you want to be is not taking trades over and over. In crypto, I want to remind you, and I said it yesterday, your first 2 to 3 days in this Nexgen room, guys, it's like drinking from a fire hose. It is overwhelming. It's a lot of information. And if you're anything like me, and you may not be, so I learned something new. I took, there's a course available to Nexgen users called the ALE course. It's taught by a 15-year client and his protege, and it's awesome. And I've been teaching the same thing for 5 years, crypto. And I was like, I want to learn this. I want to learn this. And the first day, I felt just functionally retarded. And the second day, I felt overwhelmed. And on the third day, I had to make the choice between quitting and sticking it out. And true story, that's how my brain works. And I stuck it out, and it's amazing. And once you learn the basic lingo, once you learn the basic concepts, it all really starts to fall into place. So I want you to give yourself a little bit of grace. You're brand new. And be okay being overwhelmed in the beginning. Oh, Jen, HR nightmare. I know that I'm an HR nightmare. I don't mean to be. So the easiest way to start to develop trust and faith, guys, when you have momentum and a clear path, and you see these tails, circle it. And if it lines up with areas inside of triggers, guys, that's your trade. Commit that look to pattern, or commit that pattern to memory. This is what it looks like. Rob, there are no bad words. There's only assholes that use them incorrectly. Words are just words. They have no power. My oldest son has high-functioning autism, and he'll stop you cold in your tracks, and he'll go, oh, great, pick on the retard. And then he will laugh his ass off as you feel overwhelmed because you think it's a bad word. So I don't believe in bad words, guys. Sorry. That's I believe swear words have a place in this world, guys. I think if you use words, I think intent is what's damaging. So we got to figure this stuff out. We got to learn these looks, guys. You were getting flagged. All right. That's the beauty of having the microphone and the last name Novak. I have never been flagged by a bot, even though I should have been 1,000 times. Guys, in order to get to where you want to be, you have to be able to recognize some looks and patterns quickly. That's the whole thing. Everything is patterns. So the easiest way to do that is not to take a bunch of trades and hope for the best and be overwhelmed. Guys, the easiest way to do that is to take pictures of what it means to have your rules met, what it means to have strong triggers, what it means to have a clear path, what it means to have an entry, and then also what it means to not have it. And that's where the 101 thing comes in, guys. I've already given you 55 pictures of strong triggers. We took this one yesterday as a classroom. Strong triggers is always strong triggers, guys. It's separation until the separation is gone. Weakness is always weakness. Whoops, excuse me. Small's inside. You've got to learn the difference. And the easiest way to do it is to take the picture and then write it out. What does it mean to have strong triggers? What am I looking for? How do I define it? So when I look at a market that's live, I have to be able to say to myself, my smalls are below my large, but my smalls are green and my large are angled up, and that's not at all the look. That's not at all the look. That's the look. That'll always be the look. And that'll always be the look. And even when I have momentum, it doesn't mean that it's time to take a trade. I have to make sure that my path is clear. And here, it very decidedly was not. And it keeps me out of a loser. So guys, go through and take all the pictures. I'm up to almost 700 pictures this year. Or 7,000, excuse me. Almost 7,000 pictures this year, guys. I'm in a constant state of learning. Don't ever abandon that state of learning. As you take those pictures, new users, here's what it looks like. Is the market coming from a strong top or bottom? We define that as a termination condition that reverses the market. A strong top or bottom is not mandatory for a high probability trend trade, guys, but a strong top or bottom will increase the likelihood of success. When decisions are made at key areas that reverse the market and give you your rules met, this is the highest probability trend trade you can take. You need to know the difference between momentum and weakness. You need to know whether you have a termination condition, if it only has the potential to break but hasn't broken, or if that path is clear and it's guns blazing until we reach the next line. Guys, you've got to learn these looks, commit them to memory. And then you've got to be able to define your entry. And I'm going to say it again, and Ron, here comes your nickel. The high probability trend trade is not your get-rich trade. The high probability trend trade is not the only trade. The high probability trend trade and learning these advantages is what sets you up for your get-rich trade. It's what opens your eyes to the patterns that you're going to be using to trade the market more often than this, guys. This high probability trend trade happens 3 to 4 times a day. Those medium probability 50-50 trades probably set up 15 to 20 times a day, but only 5 or 6 of them are good, where it's a waiting game. So this is also the checklist, guys. The high probability trend trade checklist. This is the second page of that sheet. This is print it out, put it on your desktop. So every time you look for a trade, even on simulator, even if you don't know what the hell you're doing, guys, have this in front of you. Do I have momentum? Are there no terminations? Is there an area inside of favorable large triggers? Write these rules on every chart that you take a picture of. Write these rules verbatim. Use the language, odds favorable, termination. And most importantly, and I think this is the one that really sets you up for that long-term success, every time you look for an entry, use the phrase area inside of triggers and capitalize inside. Because so many people take losing trades from outside of those triggers where the market shouldn't go. Embrace the language, guys. Print this out. And then I'm going to give you a plan. This is weird looking to me with the dark thing, but I'm working on it. This is the KISS plan. The Keep It Simple Sunshine plan. There we go. No offensive words. Keep it simple, sunshine. Guys, this plan is a stepping stone in your learning journey. This is designed to optimize your chances of success with a high probability trend trade. Through simulation, study, class feedback, continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Jen, I'm liking it, but it's weird. When I wake up in the morning, 332-inch bright as all get out screens are a little oppressive on the eyes. Guys, when you practice, you're going to get better. When you study, you're going to get better. When you get feedback, you will get better. And the more you practice, the better you'll get. And all of that effort is going to result in you becoming a chart reader. And once you're a chart reader, guys, you're going to find your plan. You're going to find your trade. You're going to recognize your patterns. Don't rush it. Enjoy being new. Remember when your parents told you don't be in a hurry to grow up? There's plenty of time to be old. Guys, this is the same thing. Give it a little time to get good at it. Get good at one thing. Your simple plan for consistency, guys, don't fight the large chart. Don't fight the large chart. If the large chart says up, there's no reason to go down, not as a brand new user. Guys, if the large chart has momentum to the upside, there's no reason to go short, not as a new user. If the large chart has a termination condition, there's no reason to trade into that line, not as a new user. And I'm going to keep saying not as a new user because you'll find a time, because you're so in tune with your patterns, that maybe it makes sense to trade into a termination condition, that perhaps it's not the worst idea ever to not trade with momentum, or maybe your entry isn't as perfect as it could be for the high probability trend trade. Your chart reading will tell you that. But guys, define your entry, because great entries create manageable trades. Great entries reduce risk. Great entries give you room to targets. I moved the wrong one. Define your entry. You'll find more entries. But your entry comes from the area where the market is most likely to continue. And that's where your stop placement begins, guys. Management is where most traders fail. Management has us holding on for trades longer than we should because we want to make more money. Management has us jumping out of the perfect trades because we're fearful and don't trust the methodology. Management has you arbitrarily moving stops, getting stopped out only to watch the market do exactly what your indicators said that it was most likely to do. Management is where you guys will make and lose money. So in the beginning, management should be every bit as mechanical as your entry. It should be nothing more than if then. In the management plan and the KISS plan, is designed to remove the emotion because everything becomes if then, and it is designed to get you paid. It is designed to get you paid, guys. So the management plan in the KISS plan is 100% dependent, where'd that picture go? On your ability to pinpoint where the market is most likely to continue. So if I take an entry at an area inside of favorable large triggers, then my initial stop is 4 to 5 ticks below those triggers in a long trade, above those triggers in a short trade. And at this point, there's nothing for you to do. Kurt, don't move your stop. Zorro, don't move your stop. Rob, don't put your stop off in the distance. Leave it right where the market shouldn't go. And they're either going to come stop you out, and they will, 2 to 3 out of every 10 for the high probability trend trade, or you're going to get that magical reversal bar, that confirmation bar, confirming the direction of your trade. And this is your first stop movement, guys, 2 ticks below the reversal bar. You've just cut your risk in half. Doesn't mean you're going to win, but it means that if you lose, you're going to lose less. And at this point, there's nothing for you to do. Put your hands on your head, something, sit on them, roll back from your desk. You're either going to get stopped out. It's okay. Learn how to lose. It's part of it. Or it's going to hit your first target. And one of the cool things about the KISS plan, and this is by design, is your first target is $100 away from your entry. That's it. We're in at 66.50, guys. We are out at 68.50. Our first contract comes off at $100. That $100 goes into your account. That $100 kind of reaffirms that entry is a great entry. That $100 creates confidence because it is success. That $100 dries up your sweaty palms. It gets those butterflies out of your stomach. And you're going to move your stop to break even. And I'm going to tell you, break even is probably not your best bet. But in the beginning, we're learning how to get paid. And even more importantly, I think, we're learning how to trust our read. We're learning to believe that the only reason we're in this trade anyway is because of momentum and a clear path. So what you're going to do is you're going to sit tight. You're either going to get stopped out, break even, or it's going to hit your second target, guys. And if it hits your second target, you're out of the market. You're done. That's it. End of the trade. You just made $300. Is this the only way to manage a trade? Hell no. You will craft a plan tailored to your personal goals based on your experience reading the indicators. But until you can read your indicators, guys, this keeps you getting paid. This minimizes your risk. This protects you and makes it easier to hold for that next target. And here's the cool thing. This is what I love. $300 a day. That's it. The best you could do is $75,000 a year. Hey, Rob, guess what? On that high probability trend trade, if you hit your first target and break even 3 times, guess what? $75,000 a year. So, no. Break even is protecting your win. Break even means that you just got paid and nothing to lose. Break even means that you got out of the trade with absolutely no loss on the second contract. Doing nothing is doing nothing. Getting paid and going to break even is protecting your investment. Don't confuse the two. Break even 4 times a day on those. $400, 6 figures, Rob. Our job as day traders is to get paid. All right, then get paid. You're only doing 1 lots. Why? Because you're learning the methodology, but you refuse to be on sim, so you're afraid to put that financial risk in there. Is that fair? You don't want to risk a lot of money while you're learning this, right? I don't want to lose a lot of money while I'm doing this. I don't want to have that risk. I need it to be small. Rob, I don't know if you knew this or not, but there's this thing called Simulator that will allow you to develop confidence in the methodology, to learn to trust it, and to learn how to manage. And you can trade 2 contracts. And you can build up a foundation of trust so that you're not scared shitless when you go live. But if you go live too soon, if you don't trust your methodology, if you can't manage your trades, you're gonna change your plan. Just throw it out. You do whatever you want. Guys, I will never tell you how to trade, but I'll tell you that people that jump off of Simulator too soon struggle for a long time because it's all about the money. It's all about the money rather than the process, and the process yields results, guys. You will create a plan tailored to your personal goals based on your ability reading the indicators. But you have to know 2 things before you go live. Why you will enter a trade, why you will exit a trade. Guys, these should be written down on a piece of paper. These should be in front of you every day. These should be memorized. These should have zero wiggle room for you before you go live. Because if not, it's emotion that drives your management plan. Your entry rules are based on patterns proven to win more than they lose. You've got to learn to believe that that's the case. Every time you deviate from your rules, you pull away from that edge. You change the scenario. Your exit conditions should be identifying when your advantage is gone and your targets haven't been reached yet. So if my target's at $200 and absolutely nothing has changed in that trade, there's no reason for me to do anything. I have to learn to believe that. I have to recognize these advantages. And you're right, Kurt, commissions will beat you up on break-even trades. If you're trading one lots and you keep getting stopped out break-even, commissions will kill you. If you're trading a two lot and you already made $100 and then you're break-even, who cares about the commissions? So if you're in the high probability trend trade, what's it going to take to get you out? Guys, this one gives you some ideas. If you take the 50-50 trade, the entry rules are different, the management rules are different. You got to know the difference between the two or you're going to confuse them. Same is true when you add a momentum. Same is true when you add an HVA. So guys, the easiest way, the path of least resistance, is get really freaking good at one thing and then go to the second. It depends on your broker. Your broker would have to answer that question. I think I pay $7 a round turn, meaning it's $3.50 to get in and it's $3.50 to get out. I believe. On the micros, if you're trading the MES or you're trading the micro crude oil, it's more like $1.50. It's almost double because they have to make money somehow. So the one thing that I arrogantly tell you guys every morning is that I will give you everything that you need to be successful in the market. 150 around turn. Yeah, that's what I thought. And I just gave you a zip file, everything you need to be successful, guys. And inside of that zip file is, we'll just go through it, is chart reading 101 so that you can learn how to read your indicators. It's the high probability trend trade checklist. So you know exactly what everything looks like. It's the KISS plan. So you know precisely why you will get in and get out of the market, and you can practice that until it's second nature. It's also the daily goals. So you can remind yourself that I don't have to make $1,000 every trade to make 6 figures a year with my trading. And it also gives you the exit conditions. And guys, this is a good start to building your own management plan because it gives you scenarios that maybe I might use to manage my trades. And this isn't gospel for anybody. You've got to come up with your own, but this gives you stuff to think about. The zip file that I just gave you also has the PowerPoint that I used to teach. So you have access to every picture that I used to teach the class. And I've already dropped my spreadsheet in here, which means that you have over 350 pictures to study. You know exactly what the entry looks like. You know exactly what the management could be. You've got ideas on how to manage it more. Guys, the only thing that has not been provided to you is the repetition to be comfortable. The experience to be confident, guys. I haven't studied for you, but I've taught you how to study. I haven't given you any repetitions, but I've shown you how to get the repetitions, guys. Your job now is to practice. Your job now is to learn those rules, commit them to memory exactly what they look like, to post your charts in the room, and to give me the opportunity to do what I do, to help you get to where you want to be. 15 hours every week is live in front of you guys. And all you have to do is ask for help. All you have to do is raise your hand. I'll give you everything that I have. Keep it simple in the beginning. The KISS plan came to be because somebody was looking for everything instead of something. And they found nothing. Rob, I promise I'll get to you. Give me just a second, dude, and then we'll talk about ATM strategies. Do the work. The results are a result of the work. That came out pretty awkward. So 3 divergences in the same price range on a large chart. Whoa. I've got momentum down. That's a pretty good read. There's a mid band just below. There's some resistance up above. Large chart. The trend is weakening. The path is not clear. The areas beyond the triggers. Maybe not a trade. Rob, ATM strategies. So click the down bar and go custom. And I'm going to give you the template here. So if I want to trade 2 contracts and break them up, I need my order quantity to be 2. Oh, and you know what? We're going to give a fish and teach to fish because I think both are important. Guys, that piece of paper that you throw to the side when you build a new grill, those are called instructions. We've got a whole thing of those here. Let me put this in here just in case, because repetition creates recognition. I want to make sure that you have something to go back and see. So the first thing that I have to do, Rob, is I'm going to hit this add button right here, and that's going to give me target number 2. So I've got 2 contracts. I've got 2 targets. And since I only have 2 contracts, I have to make sure that I have 1 for each target. You with me so far? My stop loss, if I'm trading crude oil, if I'm trading the S&P, my stop loss is 12 ticks. My stop loss, that 12 ticks is not the stop, right, Rob? That 12 ticks gives you time to put it where the market shouldn't go. So my first profit target, you want this for the S&P, Rob, or for crude oil? Cool. 8 ticks. 1, 2, 3, 4, 5, 6, 7, 8. That's $100 or 10 on the MES. My second target is 200, which means 16. So now once I have all these in, let me take this picture so that I can give it to you here. So click the down arrow, create the strategy, and then you're going to save the template. So when I save the template, it's going to ask me to name it. And I'm just going to call this one Rob's MES strategy. You can call it anything you want. And then I'm going to click save. So Rob, once I have this and it's in there, check it out. Now my ATM strategy says Rob's whatever we put on it. If I go short, and I'm not saying this is the right trade, guys. If I go short, my stop is at 12. My targets at are 100 and 200. If I need to move my stop, I have to click on the line. Maybe I put it 2 ticks above the reversal bar. Once I get there, if my first target is hit, and guys, again, this is not a trade. This doesn't fit the rules. My targets are right where I need them to be. And my job is to not touch these damn things and just leave them alone. And Rob, if the first target gets hit, it takes one of the contracts off and the second target stays in play. And you can see that it goes down to 1 for your stop, 1 for your contract, 1 for your target. And then either your stop is going to get hit, there we go, and that's what pulls you out. Does that make sense? Nope. So remove, click remove and get rid of the third target because you've only got 2 contracts. Each target needs 1 contract. So target 1, quantity 1, target 2, quantity 1. There is no target 3 because you don't have 3. And then everything else looks perfect, man. Everything else looks good. Good job. Good job. All right, guys, that's the first hour. And Rob, you'll have to do it once or twice. Everybody does, and then it sticks, right? You got to do everything once or twice, guys. Practice building an ATM strategy. Practice getting into the market. Practice getting out of the market. Practice scaling your charts, right? Practice using that white button. Practice using that F to bring it back in. Can you guys give me a Y if you see that the momentum wasn't strong, that the path wasn't clear, and that area didn't break, guys? It's going up. Pretty cool, right? No rules met from anything I teach there. The only reason to go short here would have been hope. And hope is a horrible trading plan. So guys, that's my first hour every day. This is what we do every day. You're welcome, Crypto. And then Crypto, the second half of class, I think is where it gets amazing. Because what I'm going to do is I'm going to start clicking on the pictures that people post. And we're going to go back to every picture that's posted in this room. And we're going to do two things. Oops, wrong one. The first thing I'm going to do, no matter what kind of trade it is, and you will see different trades in here. Don't be the trade police. Nice, Paul. The one thing that I'll do is I'll go back to momentum, clear path, and entry area. So on every chart that's posted, Crypto, I'll go back to the very basic high probability trend trade rules, specifically momentum and clear path, because entries vary. And what you guys have to do is not get butt hurt when I tell you that you traded into a termination condition, because this is an education room, and we're working on identifying these two concepts. The one thing that I would say I'm pretty adamant about, guys, and I won't say that I insist on it, but if you really want to get to where you want to be, guys, when you post in my room, when you share in this room, define momentum, draw an arrow. And it's not for me. I can read your charts, guys. This is for you, because remember, you're going to come back and study. Point to your momentum. Point to your path. Point to your entry. Draw a circle. And please show me the full trade. Show me the trade from beginning to end. Show me where you got in. Show me where you got out, guys. And if you are learning your methodology, it's going to pay dividends. If you're Paul, it's going to be understood, guys. Paul's been with us for a long time. Paul says, hey, check this out. I'm going to use, I don't know what Paul sounds like in real life, but he sounds exactly like me right now. This would have been his chart read. And he doesn't annotate his charts because he comes in to show you guys what you can do once you learn the software. Hey, check it out. 3 divergences in the same price range may terminate a trend. Price reaching resistance and all the triggers below is a pretty strong sign. Smalls below the large, nothing but space to the next area. Well, I'm going to find a momentum style trade. Crypto, you were wondering about the momentum style trade. Momentum here, momentum here. You take a snapback right to an area and drive it right down to your profit target. And Paul's execution is beautiful. And I can tell everybody in this room that Paul sat through my 101 class over and over. And Paul learned momentum and path and entry. And then through study, simulation, class feedback, and continuous practice, Paul crafted a plan suited to his personal goals based on his ability reading the indicators. And Paul's a freaking amazing trader. So that's kind of how that works. Nice trade, Paul. When I come back, we're going to do that. We're going to go through all of them. Weak triggers, not broken. Holy smokes. Off it goes to the races. I'll be back in 5. So what I want you to do, post them if you got them. If you have questions, I want you to ask them. Crypto, I'm going to say this because you're brand new. I'm going to say this because you're brand new. And if anyone else new is listening, listen in. You cannot ask too many questions. You can't ask me to repeat something too many times. If you need clarity, I want you to ask for it. I want you to feel comfortable with it. There's nothing worse than having a question and being too scared to ask. Not that any of you are cowards. I'm going to tell a story and then I'm going to take a break. Ron's laughing because I stink at taking breaks. When I was in my 20s, I went to a trade school. I went to learn how to work on motorcycles. And I'm sitting in a theory class. The first class they make you take. So the entire student body is there. It's about 60 dudes in a room and you're learning engine theory. I didn't know anything about engine theory. I couldn't tell you what made an engine work. I had no idea. And the instructor is talking to the class. And guys, the class, when you go to a trade school, I don't know if you know this, half of them are out of prison. The other half, or 2/3, are on GI bills. And everybody else, you know, Wayne. Then there's the guys like me. That I was a nice guy, bartender. I want to learn how to work on motorcycles. And I'm in front of all of these people, and Wayne, you'll get a kick out of this. And he's talking about camshafts. And I raise my hand, and the class gets silent, and the instructor points at me and goes, "Hey, what's your question?" And I go, "What's a camshaft?" And 60 grown men, most of them convicted felons, start laughing loud. Every one of them. Ha ha, he doesn't know what a camshaft is. And I didn't. But by the end of the day, I did. And by the end of my schooling, I could rebuild an engine with a 10 millimeter wrench and a flat screwdriver almost. So where you're at is not indicative of where you're going to be, guys. The confusion that you have now is not at all representative of how you're going to feel in 30 days, 60 days, something like that. It's okay to be new, and it's okay to not know. Let me help you understand. That's it. All right, Ron's got to pee. So do I. So I'll be back in 5 minutes, guys, and we probably won't take. And you wouldn't have a great new story, exactly, Ron. I got a million stories, not all of them good. I'll be back in 5, and then we won't take a second break. We'll knock it all the way to right before 11, and then I'm playing golf today. So I'll see you guys in a minute. Let's get going. Second half, what do we see? I see odds favorable momentum. I see a market that has the potential to continue in the direction of the trend. I see an area that has the potential to break. And guys, I saw the perfect pullback right to a mid-band. It was kind of caught in the middle. If I chose to wait for confirmation, I'm still in that trade. That's what we talk about every day, guys. Every day. So let's go back and look at some of your charts. There's not a ton of them in here, so I hope you have some good questions. Let's make some silly noises with our mouth. All right, Ron got us going. And Ron said, hey, Mark, I want you to check this out. I've been working on this thing. And when I have momentum, and when my path is clear, I'm going to find a way to jump in and get out quick and get a base hit. And guys, once you can read your indicators, you're going to find your trade. This is a trade that we have lovingly called the chili dog. This is a trade that so many of you new people try to copy and screw up 32 ways to Sunday because you don't understand the rules for it. Guys, this is momentum, room to the target, first two. You've got to learn those first two advantages, momentum and clear path, and then things will begin to materialize and you'll find more ways to enter the market. What a great trade, Ron. It's not a high probability trend trade. He just jumped in. Stand up double. Is this post news? Look at that momentum. Holy moly. Nothing in the way. Everything is screaming. That was the trend trade, and Ron, in a rare twist, gets in right on the confirmation bar. And we'll call it a double. Another great trade, guys. Momentum and clear path. We're 2 for 2. Momentum and clear path for the win. I want you to let that rattle in your head a little bit. Momentum and clear path. What makes it easy? Momentum and clear path. What increases the likelihood of winning? Momentum and clear path. What are two things I don't want to do without? Momentum and clear path. Joel, let's see what's going on here. Momentum trade checklist. So it starts with a termination. Absolutely. Strong triggers. Snap back to support and right up. I'm trying to figure out where you got in here. 909, 909, 910. So you're in as everything is rushing up. Quick profits, you're out. And then you go for the next one, and when there's a loss of momentum, you didn't. Had a senior moment. Nah, Joel, I think you did it well, man. So the one thing that you didn't have on your second entry, and really what you didn't have on either, is the synthetic stayed down, and that mid-band was there, and I think you did it really well, and it just didn't work on that second one, man. I think you did this one as well as you could. Momentum everywhere. Let's go with the momentum. And then you didn't sit and hope. That's what I love, Joel. Is when you got to the wrong side of those triggers, you said, my advantage is gone. I need to exit this trade. What an amazing concept. All right, Miss Jen. Smalls above large. Above support, mid-band held as support, reversal bar above large triggers, no shorts, no trades. All right. So you had potential to break. The large didn't get above yet. On the pullback, the large were still below. That was over here. And it pulled all the way down to 95. Without that clear path. And then it went all the way up to 39, and you never really had an opportunity there. And just no short trades yet because you have a mid-band large triggers. Guys, these are some of the most effective pictures you can take. When your rules aren't met, take a picture. Explain to yourself why you don't have a trade. Reinforce the rules. I know what it takes to get me in, and now I know what it looks like to stay out. Joel says wait. Colors don't match. Can't. Oh, it's dissecting an area. Joel, great patience. I like seeing you guys taking pictures when your rules aren't met. It's pretty awesome. All right. Wayne, odds favorable, potential to break, not a clear path. Everything says up. Price breaks the area, pulls back to it. You take the perfect momentum trade. Awesome pattern here. Everything with the potential to go up. And you take it up. Nice job. I hope your daughter has a great job at school. Do you see how it is potential to break though, Wayne? That would be the only thing that I want to ask. The large triggers haven't made it through yet. But when you get a bad top straight to a termination, everything rolls. It's likely to go up, and you crushed it. Absolutely perfect. Nice job. And remember, guys, just because I point out something that doesn't line up doesn't mean it was a bad trade. It just means it's an educational room. This is Rob. You take the short, and then there's that, holy shit, I hope everything does what I want it to do, even though it's already not doing it, stop. And then you take a long directly into resistance, and it runs your ass over because rule number 2 wasn't met. Do you see it, Rob? Traded directly into a termination condition, and it whipped you. Traded without momentum, and then, dude, you held forever. Forever. Why the hell would you give that much money back? Rob, dude, you gotta have a piece of paper in front of you with a management plan on it. And let me show you why. Because you're up $450 and you are risking, oh my gosh, I can't even do the math. 6 is 150 times 4. You're risking $600 on a trade. Or do you mean to tell me that you're okay with the market getting all the way back up here before you take an exit? Is that true? What kind of trade is this? It's a momentum trade, right? I love your target. Your target's rad. I would be break even at that point. All right. And Rob, I know you were asking about the ATM strategy, but you can't show me charts with trades on them and expect me not to talk about them, especially when there's mistakes, because I want to help you fix those mistakes. All right, Andy Man, was this Andy Man? Right on. Keep practicing with them. Keep practicing with them. So Andy Man, weak top, strong triggers. Why did you sell here? Why did you sell on the way up, not an area in between triggers? Why didn't you just wait for it to get back to the triggers and confirm? Same entry price. Now you've got risk established. And I like targets 1 and 2 met. Just curious. Right on. You're asking for my thoughts on ATMs? The down bar. Everything says down, right? It finally rolls. So Andy, do you understand that price may go to these triggers, which are flat? These aren't even a part of the equation. Or it may go up to these triggers. Have you caught that lesson in the morning? Price returns to large triggers on both charts, either one. And when they are 84 to 90, when they are 6 points apart from each other, waiting for a reversal bar, it helps. It helps a lot. Instead of just hoping that this middle of nowhere thing holds. Does that make sense? You're not trading from an area, you're trading from the wrong side of an area. You're not trading inside of triggers, you're trading on the way up to the triggers and on the wrong side of the other triggers. Let the language guide you a little bit. Let that language that says my entries come from an area, talk about that it may return and stuff like that. So I like the large chart read. You just needed a little bit of patience here to make it easier. And I love your exits. Your exits are fantastic. Just a little bit of undue stress, I think. Nicely done, man. Large chart leads the way. And guys, when the large chart tells you what to do, it actually makes it easier to sit through some of these. We saw Paul's trade. So let's go Pete's trade. 3 divergences. Triggers rolled, separated. Oh, it missed you. Man. If you didn't use a reversal bar marker, Andy. There was never a reversal bar. Oh, Pete. I'm surprised you didn't get in just below it. Paul said, Pete, dude, I'm not trying to make you sad, but here's how you do it. Nice one, Pinyaske. That happens sometimes, though. Sometimes you call your shot, and it just doesn't give it to you. It's what you do next, I think, that's most important. Do you try to fabricate? Do you revenge trade? Or do you go, well, I guess that just wasn't my money? Rob, we saw that picture. Yeah. Just hoping. You were in at 650. So you entered without momentum on any charts, right at the very bottom of the move. Nothing but hope there. That's not a trading plan. Yellow dashed arrows, 3 points off. Take profit areas. Directly into a termination condition. I don't know where you would have entered, but absolutely a termination condition is a great spot to take profits. Same picture. Yellow 1-to-1s, reverse the market. 60125 first line was my expected short. 121 1-to-1s, reverse the market. Which one's your large chart, Rob? Is this your large chart? It looks like it. It doesn't have synthetics. And you don't have synthetics on your small chart either. So, Rob, you think these 1-to-1s stop the market, right? That was your assessment. 1-to-1s reverse the market. Rob, I want you to look at your large chart. And I want you to remember that the large chart leads the way. Price reached support. None of the triggers broke. Do you see it? That's a termination condition. Termination condition. No momentum. These are the ones, guys, where you're going to have to train yourself to stop looking at that damn small chart. Stop believing that the small chart is going to give you some great entry if the large chart doesn't support it. And then let me show you the flip side of that. Andy, we're coming back to you and singing your praises. You ready? When your large chart does lead the way, when things are amazing on the large chart, you can make mistakes on the entry chart and still find a way to get paid. Does that make sense, everybody? If the large chart leads the way, it increases the likelihood of success, even if your small chart entry isn't great. And the flip side is if the large chart doesn't lead the way, you're going to get suckered into these looks on the small chart that aren't the right trades. And man, I've done it a million times. And Rob, you're a rock star for posting that picture because it's a great lesson. Rob, do me a favor. Are you watching? Thanks, Steve. Oil in 10 minutes, guys. Oil news in 10 minutes. Right click on your small chart for me and go to templates and load. And I want you to click on 5-1 Renko bar chart. You're missing your synthetics for some reason. Let's see if that puts those back on there. It's going to make your entries a little more accurate. Cell limit turned yellow. Couldn't adjust. Check connections was on. Eventually got stopped out. Stop in the wrong place anyway. That was the one directly into it. Let me give you a picture real quick. You forgot to get up. That happens, Andy. Guys, if it ever turns orange or yellow like that, this is your fix. And you're going to have to disconnect from your data, and it's a pain in the butt. But you have to reset the database, and that'll typically get rid of that hanging order. And Rob, I hope that their next picture is this trade. Odds favorable, clear path, almost 50-50. You didn't buy the pullback. Or you didn't sell the pullback, Rob, did you? Look at your entry. You didn't sell the pullback. You just jumped in, right? Just want to make sure that you see that. Because here's your pullback, and it's after your entry. You just jumped in, and your momentum trade failed, and your stop is inside of triggers. That's dangerous. I'm glad you won. Makes me happy when you guys win. I want you to be able to win every day. I want you to be able to say, with a strong top, with odds favorable, with a clear path, my highest chance of success comes from the area inside of triggers and then getting paid. Got out 100 per contract because the bouncing in the large chart. Morgan, you ready? Tough love? Bullshit. Respectfully, bullshit. You did not see bouncing in the large chart. And let me show you how I know that. That was crude oil, right? That was your entry. That's the bar on the large chart. Never changed, did it? The only bounce you saw, Morgan, were these tiny little fluctuations on a 5-1. You nailed your entry. You had it dead to rights, and you let these little fluctuations fill you with sand. Does that make sense? That wasn't too bad, was it? That wasn't too angry? But why do I say that, Morgan? Because if you type that on your chart, your brain believes that BS. Your brain says, yes, there were fluctuations on a large chart. Thank goodness I got out of this trade. You had this stupid little fluctuation on a 5-1 that wasn't near anything. And it whipped your ass when the large chart looked like this. From this top. I love these lessons, man. I love these lessons because, Morgan, I was the freaking king of writing what made me feel better about my bad exit, of writing down what made me feel better about my crap entry. And I used to do things like, oh, this fib wasn't there when I traded into it. Have you done that one yet? The fib has been printed for 17 hours. Oh, those 1-to-1s weren't there when I went short. You mean they grew backwards? Dude, Morgan, I've done it. And definitely not disappointed. Because every time that we have these conversations, guys, I promise you it sticks. I still hear in my head every day, Mark, how many times are you going to trade into those damn lines hoping that they break? John Novak. How many times are you going to trade into termination conditions hoping that they magically break for you? And in the moment, I'm like, God, jerk face. But I learned how to not trade into them. Absolutely, especially when it corresponds with Fibonacci, Wayne. especially when it corresponds right there with a Fibonacci area. Emily, what's the recipe for a strong top? Get those typing fingers going. I want to see if you've been paying attention. How do we define a strong top? I'm going to put you to work, mama. That's the first part. Price reaches, no triggers through. What does that make it when price reaches and there's no triggers through? I love this. I love you new guys that are hungry for lessons. Price reached it and no triggers through. So M, that's a termination condition, right? Textbook, 100%. Ooh, indeed. And then when it reverses the market, so it actually happened over here, the termination with no triggers through, small and large can get through. Once that reverses the market, guess what? It's a strong top. The strong top actually started all the way over here, and then there was the bounce all the way back to resistance, and the triggers never even rolled. They stayed down. Oh my gosh, that is like money. That's the one. And Morgan nailed it. Nailed it. Perfect. 3 divergences. Wayne pointed it out. 3 divergences in the same price range. Up here, why does that look like triggers through him? Well, I'm not allowed to use the R word, so Rob said that. Small triggers didn't break it. Your large triggers got a tick above. So maybe a technicality. Essentially, I mean, they got, so what happened is they were below, and when price pushed up here and came back down, I mean, they're moving averages. You got one tick above, and the smalls are still below. I'll say that's no triggers through all day long. That's definitely no triggers through. So even if you didn't believe this 1M, that one confirms it 100%. Even on that one, it confirms it 100%. So, but that's close enough. I feel good about it. Same thing over here. Let me pull this one up. You're welcome. See how you're like, oh, but the smalls started to break through. I get that a lot. The smalls started to break through. Well, both lines didn't, so we're not going to do it. Great. Morgan, I love your trade, man. I want you to run a lap on that large chart nonsense, though. And guys, I'm going to tell you right now, I get comfortable with you. I do. I feel like we're all friends, and sometimes I'll mess with you. And if it ever hurts your feelings, let me know. Paul says, check it out. 3 divergences right off of fibs. Odds favorable momentum. And I love this. Man, Paul, are you still in here? He may have already gone. Probably took the kids to school. Guys, I want you to check this out. Momentum trade gets paid for the momentum. When the momentum trade fails, it turns into the perfect trend trade. He takes quick profits right where the large chart was bouncing, and then he lets all that momentum carry him all the way to the fib. You can have thin skin and be a trader, Rob. I got butthurt all the time from my brother. That's why I try not to butthurt you guys a whole lot. But he's also my brother. Great trade there. And notice how the large chart never changed, and the fluctuations on the small chart are what create the advantages. Great stuff. You guys are killing it today. And man, you went to public school. You'll take a lot more than that. I love that. I did too. I went to public school and not the best part of town. All right, it took forever to get the 1-to-1, and it did once it made it all the way to 6,005. Took profit here. I love this. Weak triggers, divergence, higher divergence with the momentum you enter, and you get out of trouble. Andy, this is awesome. This is some Ron C stuff. That is rad. Andy, great trade, dude. I love that one. Isn't it easier when you trade from an area? Doesn't that create confidence? When you're bouncing off of something, I love areas for entries. I hate taking entries from the middle of nowhere because there's nothing to support it, right? Good stuff, Andy. JN taught you higher divergence. Yeah, he's pretty smart. That John Novak. I should invite him to Thanksgiving or something. All right, I think this was this Pete? Pete. Big chart still good as far as momentum. Why didn't take the trade even though pullback to mid-band inside of large triggers. Both charts heading into potential termination conditions. This is a sucker play. It may continue down, but terms kept you out. That is the voice of somebody that has been hurt before. I love it. Termination. Pete knows he doesn't have to go short into it. Let it break. Let it roll. Who cares, right, Pete? Who cares what it does? I'll find money either direction. But I'm not going to trade right into it because I know more often than not I'll lose. And I'm not in this game to lose. He's pretty sweet. Who wins the Thanksgiving? Man, I don't know, Andy. One of the characteristics of Novak men is we are fantastic cooks. My brother can cook. Oh my gosh. I love eating at his house. Almost as much as I love eating at my house. I think we both lose Thanksgiving though, because if there's going to be 10 people, we cook for 1,500. We do that every time. All right, Wayne. 50-50. Heck yeah. Dig it. I have, Ron, a few times. I do like a fried turkey. 50-50. There was your trend trade right there. Didn't take the trend trade. That's no worries. You get in on the momentum trade. You kind of catch that second little piece of it a little late and get paid. Nicely done, Wayne. Nicely done. Could have taken the trend trade. Didn't. Maybe split triggers. You're like, maybe not. I'll get it up here when it gets above that fib. I like it. Nicely done, dude. And then you got stopped out with a loss of momentum. What a great plan. If I'm in a momentum trade, why not exit with a loss of momentum? Brilliant. Brilliant. You waited because it was split. I like it. And then you got your confirmation. And you said, let me get to the other side of the triggers. I don't mind that at all. What a beautiful chart read. And guys, what Wayne just did is Wayne said, let me look at my charts. Let me weigh out the advantages versus disadvantages, and let me take an entry that suits my pain tolerances. And Wayne, you do it like a rock star every day. You're so good at what you're looking for that even if it doesn't make sense to me at first glance, if I stop and read your charts for a minute, it's freaking brilliant. I love it. It did end up breaking both charts, just wasn't my money. Oh, that's the voice too, guys. NMM. Not my money. Hey, Mark, it went all the way up. Where was my entry? I didn't have one. My rules weren't met. Not my money. You guys want to see something as we get to the bottom of the trigger or the pictures? This is crude oil. Oops. There's the beginning of the day in crude oil. This is where we are currently. Does anyone believe that there weren't opportunities to make money in there? Did anybody find $400 worth of profit on crude oil today? Or S&P? Anybody? Anybody up $400 in their account? Yeah. Telling you guys. 750. What's your goal? Do you guys have goals every day? Do you have a number that you try to hit? Or do you just keep trading till you give it all away? $1,000? I like that. $20,000 month is never a bad month, Wayne. You have to know where you're trying to get to. most traders that I know lose biggest after they've reached their goal. They make their money and they feel invincible and they give it all back. I see it a lot. I've done it myself. 1,500 on small, 10,000 on large. Perfect, right? You have your goals. Here's the other side of it though. How much are you willing to lose before you throw in the towel and say, I give? Most people don't think about that because thinking about losses hurts their delicate dispositions. I'm willing to lose $650 before I call it quits. And if I go down $650, I go into simulation because something's not working. It's rare that I lose 2 in a row. 2 in a row puts me just below my stop loss. You gotta know why. You gotta know how much. You gotta be able to look at these things. All right, Kurt. Strong top, 3 divergence. You got some varicose veins working, but we're okay. Odds favorable. Yep. Waiting for the area to break for a decent setup. Kurt, this is where the MCL chart got you again, brother. Because everybody else had the perfect high probability trend trade right down to support. Your MCL got you, man. What does 3 divergences on a small chart mean? You don't have to. I'm going to stop telling you that might be a good idea. Let's go to termination conditions real quick. And I asked that question for a reason. Three divergences in the same price range may terminate the trend, right? That's okay. You don't have the repetition yet, but if I keep asking you this stuff, it's going to stick. 3 divergences in the same price range may terminate the trend. Notice that it doesn't say on the large chart, on the small chart, on the range chart. It just says 3 divergences may terminate the trend. Where are you going to see it first? You're going to see it on the small chart first, usually. That's why we talk about it in terms of a small chart termination condition. Any 3 divergences in the same general price range usually causes major reversals, true on all of the chart timeframes. Expect larger moves after termination conditions. Divergence, divergence, retest a divergence, and down it goes. So the cool thing is that 3 divergence is pretty universal. And if you learn that very basic language that 3 divergences may terminate the trend, what happens is every time you see 3 divergences, you're like, holy crap, I better not go long because that may terminate the trend. Good, great question. Awesome question. The pirate trade. Everything says up. The potential to break. 2 divergences. Get in. Get down to the reversal bar marker. Arrgh. Once you learn how to read your indicators, every chart, Rob. Every chart. Do you remember how... Okay, let me show you. Oh, I like this. You guys are turning this into a lesson. Oh, where did it go? Check this out, Rob. This one area where I had 3 divergences on the small chart may terminate the trend. That's kind of what it looks like on the large chart. Still looks like odds favorable momentum down, doesn't it? Oh, cool. Hit them straight, Ron. We'll compare scores tomorrow. Tell me yours first so I know if I need to lie. Rob, does that make sense? Do you see how the large chart still says down in strength, but the small chart said, hey? Cool. So we talk about it with the high probability trend trade because you'll see this change on the small chart first and it'll keep you from taking that last entry. It's the exact same thing. And if I had like a 21 chart, Rob, the 21 chart would look just like this, but the smaller time frame would have the 3 divergences. So 3 divergences on any chart may terminate the trend. And let's just test that theory real quick. Let me build an even higher time frame. I like doing stuff like this. I like taking these lessons because this is chart reading in its most basic form. This is chart reading like in its most pure form. So check it out. 1037. So let me circle this real quick and just see. So these 3 divergences here, check it out on the 21. Well, because we talk about it, Rob, as 3 divergences are the only reason on a small chart not to take the trend trade because it's a termination condition. There's 3 divergences on a 13.2, and look at that. Everything set up on the 21, 3 divergences kept you from trying to keep going long. And you could keep doing this. You could keep going up time frames. So no matter what chart, and maybe that's my fault for not talking about 3 divergences, that it's true on every chart, but you're going to see it first on the small chart. Good stuff. Thank you for asking. I like it, I like it, I like it. All right, Rob. Now you have your synthetics on there. All right, termination. All right, Rob, I want you to put a finger on the Y and a finger on the no, or on the N. Do you have odds favorable momentum? Hold on. You were quicker than I thought you would be. Smalls below the large, large are wide, angled in the direction of the trend. You're getting close, but you're not there. Not at all. These triggers have to be wide. That's your momentum look. We're still waiting for the roll here. That's okay though, because you saw red, 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 good. So Rob, do you have a clear path? I'm going to give you the momentum read because it was red. Is that no, you don't have a clear path, or you're not sure? Either one is an acceptable answer. Because it opens the door. No clear path. All right. You went short at the area inside of triggers. And Rob, I like that you waited for the pullback. And I'm not telling you that this isn't the right trade. And I'm not doing anything like that. So I want to ask when we look at your entry. You had the beginning of momentum, but not quite, but that's okay. You're trading into a termination condition. And then Rob, that's that gap theory when it's above the large triggers. No, you didn't just jump the fudge in because you waited for a pullback. Your jump the fudge in would have been down here. So what you did is, dude, you took a good looking trend trade entry. Kind of. Large triggers are up here. Your 5 ticks above it. That makes sense. But you're trading directly into an area that can stop the market. So, Rob, the only thing that I would say is that if I'm going to take this trade directly into an area that may stop the market, I don't know that I'm going to leave $150 of risk on it. I don't know if that's the best thing for me. This is where, because it could go back up to these triggers, right? Or it may just continue right here. I don't know. Rob, this is where that reversal bar, because what happens if you get a reversal bar? You're below everything and you're on your way down. This has the potential to pull way up here. Okay. I'm not mad about your stop. It's a tick or two higher than it needs to be. The stop isn't the challenge, Rob. The challenge is that you don't really have odds favorable momentum yet. You have what could blossom into it eventually. But it's this lack of a clear path. And so you are where I was. And if you were me and I was John Novak, I would say, Rob, how many times are you going to trade into these damn lines expecting them to break? Why not just let them break? And let's see what happened. Let's go to the ES and take a look. And that was it. And you probably pulled a winner out of it, right? I hope you did. I hope you got a winner out of that one. And I hoped you moved your risk. Cool. So do you see how, Rob, the only thing is when you know that there's trouble there, it's okay to insist a little bit. Like, just talk about it. So see how we are into support. And look at how split the triggers are. And it's just, it's crawling all the way back up. That's that gap theory. Price reaches the area, large triggers a full bar away. Do you see how it closes the gap to the triggers? There's your patience piece. Instead of trying to go short, trying to go short, trying to go short, trying to go short, let it go. You do. That's your thing. That was my thing, though. It would be so hypocritical for me to be mad at you for it. You trade into areas because you're still working the patience piece, right? You haven't lost enough trades into termination conditions to feel like it's a bad idea. And then what's going to happen is you're going to overthink every termination condition. Okay. Well, then it's up to you to make a choice. I know you guys hate this. You can hate this, Mark. Stop telling me to do it. Do you believe that you could take 25 pictures of termination conditions? That you could write down exactly what it means to have a termination condition? That you could take this look and write these words and say them out loud and visualize it? Don't you think eventually you would be like, holy shit, I can't go long here. What a horrible trade. There's a reason that I talk about taking pictures, guys, and I know it feels like work, but eventually you have to believe that your way isn't working if you're making the same mistakes, and you've got to try something else. 6,800 pictures. Guys, my laptop has 10,000 pictures on it. This is from, was it October of last year, November of last year? And it's not just the pictures that I take in class. I promise you guys, there's a way to get good at this. But it takes a little bit of work and repetition, and you've got to stop trying to get paid. You've got to start trying to follow rules. Odds favorable, clear path. There was your potential entry, and then it just dances. Blop, 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 blop. And then when everything rolls up, you're like, I can do this. I like it. Wayne's kind of that chili dog look. You're skipping out on the trend trades. You're like, I just don't like the trigger look. It's not perfect. Let me wait till everything tightens and then go. And I like that, dude. That's solid. I like what you did there. And then stop, move to cover loss of momentum. So you get your pattern, you move your stop, and if you get a reversal bar on the wrong side of triggers, you're going to exit the trade. I love it. And doesn't it feel good knowing that the absolute worst you could do is $110? The absolute worst you could do is $110 on that trade. Golly, that feels good. I love that. I chase pivots until I have a reason not to. I want to try and find one of my stop movements. I don't know. I can't find it. Guys, I'll chase that reversal bar. My job's to get paid and to keep money. I think that's a great stop movement. And then when the momentum fell, oh, you forgot to chase the reversal bar. So you went from loss of momentum for the exit, 75.9, and then, no, you did, 75.9, but the market kept going up. It's only a 2 or 3 tick difference. But guys, as that reversal bar marker goes up or down, check this out. Like if I'm following it, every time a bar prints, it moves. Chase that thing. All right, Zorro, odds favorable momentum. Everything says down. You take a pull back to an area inside of favorable large triggers, and you make the easiest money anybody in this room is ever going to see. Nice trade, Zorro. Breakout long. What does that mean? Well, we had odds favorable. We had the potential to break. You just took the trend trade. And then when you took the trend trade, you got out of potential trouble. Nothing wrong with that. It's not a breakout. Just a trend trade. Nicely done, Zorro. Odds favorable, strong top. Cheetah, you're missing synthetics. Did you notice that? All of this support, you should see that over here. It would have helped a lot, I think. I love the look on the large chart. That would probably help you a little bit to have your synthetics over. That's the same picture, but yeah, all of this support would have shown up. I like it though. You get in just below the mid band, stop just above the triggers, and you ride that momentum down. And dude, momentum. Dig it. Kurt, if you change your 13.2 to CL, leave your 5.1 MCL, will your synthetic triggers be wonky on the small chart, which might cause a stop placement be off? No. So Kurt, good question. So check it out. Let me go to CL because it loads faster. On your large chart, let me let that load real quick and try not to crash. Oh, damn it, I did it. I tried to move it when it was loading. Guys, don't do that. It doesn't work. It crashes NinjaTrader. You have to let it do its calculations. So Kurt, we're going to get to that one. And then M will answer yours as well. Give me just a second and I got you. Promise. All right, let me pull this back up, Kurt, and then we'll be good. No, it's okay. I don't have any mojo. You guys have met me. So the cool thing is, Kurt, with that, is that if the large leads the way, right? It's still calculating. Cool. If the large leads the way, and we'll use this as an example. On this chart, the one that's leading the way, that's telling me that I have a clear path, isn't this where price is likely to return? Absolutely, right? So that's pretty consistent. You can look at it. The cool thing is that the price action is virtually the same, which means that your moving averages are virtually the same. What's really different, Kurt, is where the market has the potential to react. Based on which, oh, it's not going to go because it's different markets. So that is 15. So the large triggers are going to line up pretty much, but the difference is you had a fib here and a fib here, and those are the ones that are going to throw you off. Because the entry is the entry. The entry is always the entry, but It's the areas that may create a bounce. That's what you're worried about. That's what kept you out of the trade here, because this fib was over here. But the people that the movers and the shakers, they had nothing. So I wouldn't worry about it. Yeah, cool. Get it back to crude oil. There we go. What's the difference between the thicker and the thin fibs? They're going to try to tell you that it's a thyroid or a glandular problem, but really they just eat too much. Not really. So on your large chart, you've actually got Fibonacci areas from 3 time frames. You're going to have the ones that are native to the 13.2 to your large chart. You're going to be able to see the ones from your 5.1, and those are going to be skinny and they won't print all the way out to the right. And you'll also see the ones from a higher time frame, because when you open your software, guys, it builds 10 higher time frames and runs these calculations. So you're actually going to see the fib from one step up, the 21.3. You're going to see it from one step down, the 5.1. These won't print all the way to the right. And then you're going to see the ones that are native, and those are the ones that go all the way over. Here's the deal, though. Some people will say, well, it's only a 5.1 fib, I'm going to trade into it. It's only a 21.3 fib, I'm going to trade into it, right? It's not the 13.2 fib. Guys, and this is a great example. The 21 fib stopped it cold. The 5.1 fib stopped it cold, and the 13.2 fib stopped it. So it's 3 different time frames, and the thickness and how far it prints dictates where it came from. And then one of the things to remember when you have this is that your synthetics, the ones that come from different time frames, don't print all the way over, and they won't print above the most current bar. It won't give you that next block in the puzzle until the bar prints, and you'll see that with the mid-band, 1-to-1s, and synthetic fibs. And what happens is if those 1-to-1s or fibs are close, you may be like, cool, I have a clear path. It's not over my price, but it will be once the bar prints. Rob, you want written rules? Tell me if this would work. Hold on. Let me get to it. If I gave you something that told you why you're doing it, what you're looking for, where to find it, why you look there, how to get to where you want to be, and then took the rules and showed you exactly what it looked like, and then took the next rule and showed you where to look for them, how to identify it, when it's broken, when it's only potential, taught you to be patient, reminded you didn't have to trade into lines, and then something that broke the entries down into a very readable, this is exactly where my entries go and exactly where my stops go, and what do I do if it's not perfect? Maybe I wait for confirmation. And how do I study it? Would that work? Something like that? Or does it need to have pages? All right, so Rob, I'm going to be real honest real quick. I've been giving away this effing PowerPoint every morning for the last year. There it is again for you, brother. Look at it. You guys have everything you need. The only thing I can't do is make you use the tools that I give you. So Rob, go through that. And the cool thing is if you have a question about something in there, take the picture of the picture you're not sure of, drop it in the room and say, Mark, talk about this. I need help. And I got you, I promise. Because when you buy your first Lamborghini, I'm going to be the guy cheering the loudest. But the tools are there. I tell you guys, I give you everything that you need. Everything that you need to be successful is placed in your lap. Every morning, you get this zip file right here that has everything that I used to teach this class. The only thing I need you to do is use it, read it, ask. And Rob, you do an awesome job with questions. Do you have Microsoft? Cool. Then it should just default open up to PowerPoint. It's a PowerPoint. But if I'm not mistaken, inside of that zip file that I just gave you, there's also the same thing in PDF form. So there's one in PDF, and then there's one in PowerPoint. It is PowerPoint. PPTX is PowerPoint. And then inside of this zip file, there's the exact same thing in PDF form, but so you don't have to download a zip file. There you go. There's the PDF file of the exact same thing. Uh-oh, my upload failed. Uh-oh, my upload failed. Hold on. Someone asked me before to okay, it's not letting me do that. I can email it to you if you can't get it out of the zip file. Small begs you to sell pullback to the one-to-one in the mid-band. Momentum has left the building. It says no. I like this chart, Wayne, because it just says I don't have the advantages I need to take the trade. I've got weak triggers, and your areas are on the wrong side of the synthetics and large. Did you notice that too? That they've gotten to the wrong side of the triggers? That's a big one. I love it. I love these. Guys, keep posting pictures when your rules aren't met. Open Office, document recovery. So that's a tracking sheet, not recovered yet. Did you hit start recovery? Are you sure you have Microsoft? Open Office is, whoops. I believe Open Office is a way to read yeah, Open Office isn't Microsoft. Open Office will let you open up like Excel files and still be able to use them. But it's not Microsoft. So like if you go to your search bar and type in Power, the PowerPoint app should come up. If it doesn't, you don't have it. In which case you would want to use this one. Stupid upload. Which is in the zip file. So this is everything that's in that zip file. And there is the order of picks as a PDF document. But for whatever reason, it's not letting me drop it in the room. But I'll email you the PDF, Rob. I'll email that PDF over to you. Oh. And presentation can read a PowerPoint? Right on. I didn't know that. That's outside of my pay grade. I don't understand that. I've just got Microsoft Office. I've never used Open Office. But I guess you can use it. Try the recovery, I suppose. Hit start recovery. See if it works. Or don't if you're uncomfortable. All right. Emily, does a pivot stop out 3 divergences in the same price area cause for a strong top or bottom if the triggers roll? All right, Emily, what would we call a pivot stop out? What's another way to describe? Let me go to the termination condition section. It's a termination. So Emily, if that termination condition rolls the large triggers, wouldn't that be a reversal? And that would make it a, I love this. Guys, I'm such a sucker for language. If every time you're curious about a strong top or bottom, Emily, you say, well, I get a termination that reverses the market. That's it. That's your language. A termination that reverses the market. But what if it's a fib? Well, if it's a termination that reversed it, yeah. What if it's a pivot stop out? Yeah. What if it's one-to-ones? Yep. What if it's a divergence high? Absolutely. What if it's 3 divergences in the same price range? You better believe it. And what's cool, Emily, is it never changes. It never changes. It's always a termination that reverses the market. That is the recipe for a strong top or bottom for us. So, Emily, was it a termination that reversed the market? Let's do this. I love this. No. So is that a strong bottom? No, that market doesn't squat. Bum, 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 bum. All right. Do you see how that was a 50-50? The small triggers made it through, but the large triggers didn't? Not a strong top. Because a strong top or bottom is a no triggers through termination that reverses the market. I love it. This is one of the reasons why I think annotation is so key for us as we learn. And everybody learns different. And guys, I know that for a fact. Everybody learns different. Some people need to see it. Some people need to hear it. Some people need to do it. I have found in my humble experience that when you look at something, right, this is why children's books do what they do. And I'm not calling you guys children. But when you have a children's book on recognition, well, this is awards. What is a cat? This is a cat, right? If you had never seen a cat before in your life, you wouldn't know this is a cat. But if you saw 20 pictures of this with cat written next to it, you would begin to recognize what a cat is. Your brain goes cuckoo when it comes to strong tops and bottoms. You can't process. That's okay. And honestly, it's not. Honestly, it pisses me off a little bit. You've been here for almost 4 days now. And you're struggling with concepts. And I don't know how they do things in Australia or the UK. But here in America, we are experts on day one. Experts, dang it. That's what my brain believes, is that I have to be. I keep crashing my stuff. So, Emily, are you comfortable with termination conditions? Price reaches an area, where are my triggers? Yep. So here's the cool thing. So M, do you see the termination? Golly, I've got a corrupt workspace. I'm going to have to rebuild that real quick. Hold on. Let me do some love real quick. Dang it, that was such a good picture. Somebody do me a favor and take a picture of crude oil right now and drop it in the room, if you don't mind, while I struggle through this stuff. I'm going to clear stuff out. And Kurt, hang in there. Repetition is the key. Amen. Thank you for posting that. Guys, it's easy for me to tell you everything's going to be okay. It's nice when people that have been there remind you that your journey is totally normal. I had to have that talk with my friend this morning. The exact same talk. All right. Thank you for that, Kurt. So, Emily, this is crude oil in the moment, right? Price reached yellow 1-to-1s, and the triggers remained above. Do you see it? What do we call that? It's a termination, right? You know that recipe. because that's the beginning. So what's got to happen for it to be a strong bottom? Triggers roll. Amen. Guess what, Emily? You know the rules. I'm sorry, Emily. That's my southern grandmother coming out. You know the rules. You just haven't committed them to memory yet because you don't have the repetition. But you know exactly what you're looking for. But in the heat of the moment, you start trying to over-process. You start trying to think about too much stuff. And you're trying to take all these different concepts that you're just now learning and be great at them. And that's okay. You're going to get there. Hey guys, if you ever try to open the same workspace like 5 times and it crashes every time, your workspace has something corrupt in it. There's something going on in that workspace that is not coinciding and working with NinjaTrader. You will have to build enough. Perfectionism is so overrated. I like to suck just a little bit at everything I do, because then when I get better, it's fun. I hate unrealistic expectations. Hate it, hate it, hate it. But we all create them for ourselves. And then we hold ourselves to this standard. I don't know if you have kids, but if you had a 5-year-old learning to do this, wouldn't you be patient because they're young? Wouldn't you be patient because they're new? Wouldn't you be patient because it's all brand new concepts that they're not familiar with? Of course you would. Give yourself that same leniency that you'd give a child that's learning this. 28 and still a baby. You are a baby. I got kids as old as you. Almost. Baby. But doesn't it make sense that you should give yourself the same courtesy that you would give a child? And guys, you got to take this to heart. You've got to take this to heart. Stop trying to be perfect. Learn your patterns. You'll get there. I've been doing this for 5 years and I still screw up. I know, Jen. One good shot right to the schnoz, if you don't mind. Thank you. Sit her down. If you could do that disapproving finger wag thing, that would be great. I think that would really set her straight. And trust me, guys, it comes from me having been where you are. I've been frustrated. I've almost quit. Oh, this seems like a good time for this picture since I don't have any charts to post. And I love this one. The experience curve. Some of you have seen this. When Jen told you, guess what? We're going to teach you this. You said, ha, this looks like fun. And you started getting pictures of Ferraris and big houses and cute boys cleaning your pool, right? I can't wait. And then you sat in my class and you were like, holy shnikes, I've got to learn stuff. This is hard. I've got to understand momentum and a clear path, and then I have to find an entry, and then I've got to figure out how to manage this thing. This is crazy. I've been at this for a week and I can't believe I don't have it. And then everything starts to click. Everything starts to click and you start to see momentum and you start to see termination conditions and you start to understand entries. And you know the rules for a strong top or bottom, but you don't have the repetition for it to be second nature. That's cool. That's okay. And this is where we get in trouble, when we start to get the concepts almost. And we're like, well, I'm pretty much a badass at this point. I'm going to start taking trades. I'm going to go live. I'm going to risk every penny that I have in the market because on Simulator I was a badass. I'm assuming I was, but I never posted in the room. So I'm not sure. And I know I'm following rules because I won on Sim, but I don't know if I'm following rules because I never got any feedback. And this is the point right here. I was 30 days in. This is the Mark Novak story. I was 30 days in. And I went live, and I had a $6,000 account that I had put together that I was going to trade with because I thought, man, what a cushion. It took me 2 hours, to lose $5,000. It took me 2 hours and 21 trades to lose $5,000, and I had no idea how it happened. I didn't know why I lost. And it humbled me all the way back to the I don't know shit stage. And this is where, show of hands, guys, let's make everybody in the room feel well. Who's been at that stage? The oh my gosh, maybe I should just quit. The egads and little fishes, I'm not sure I could ever do this. The man, this has kicked me in the clackers too many times. Why on earth am I still trying this? And you're still trying it because you know that it works. And you know that the problem is not the software. That the problem is that 6-inch gap between your ears, right? And then right here, this is where people make a choice. This is where you either keep doing what you've always done, expecting different results. And guys, a lot of us get there. You're good. And this is where, once you hit that point, and this is where people send me messages, and I wish I had kept them. I really wish I would have kept the collection of them. I've probably gotten 50 messages from people telling me that they're going to quit, that they can't do this, that this is stupid. There's no way it's ever going to work. And I would say 45 of those 50 people turned the tables and followed the plan. They started the repetition. They started taking the pictures. They started following the path. They started asking for help. And once they did that, it actually makes sense. And then, did I do that? And then I did, right? And that's how it works. Is you've got to come at it guns blazing, gung-ho. And guys, pardon my French, you have to F everything up. But you can't be content with accepting your mistakes. You have to learn how to fix them. And if you don't know how to fix them, well, that's where I come in. My job is to help you fix them. And Rob, after 2 years, it's time for you to follow the path. It's time for you to get results. And Rob, that's not the longest time that I've ever seen. I've had people come back after 8 or 9 years. They ditched it, walked away for 3 or 4 years, and then came back, and they said, okay, I'm going to start from right here, and I'm going to find my way. There's probably people in this room that have walked away and come back. Oh, thanks, Andy. And that's your story, Kurt? Did you walk away and come back? And I'll tell you, when you've lost, guys, when you've lost and you come back, it's like getting bit by a dog and then learning to love dogs again. You're tentative, right? You're a little nervous. You got to build that trust. And that's what we're doing in this room, guys, is all we're doing is we're building trust. We're learning how to recognize advantages and then see. Ready to walk away and see me next week? Andy, there's times where I've shut off the computer at 11:02, and I said, there is no way I am ever going to take another trade today. Screw this. Never. And I go play golf, because once you get to that point, man, you're not going to do yourself any favors. Price reach support. Triggers are above. Termination condition, right? Pretty cool. You have errands and a job. Yeah, go drive fast. In a safe environment, right, Z-Robot? So guys, I don't want you to get put out. I don't want you to get nervous. I don't want you to get scared. I don't want you to get down on yourself. I want you to remember that you're new. And this is for my wife. I want you to give yourself some grace. It's okay to be new. Sucks to be new, but it's okay to be new. Okie dokie. Is that it? Did we finish? What a great day. You guys are awesome. I feel like I should have my Reverend collar on right now. I'm going to have to rebuild all my workspaces tonight. That's okay, though. Guys, I'm going to come back tomorrow, and we're going to do this again. And I promise you, we're going to do it every day until you get to where you want to be. The only thing that I can't do is force you to participate. So if you're sitting on the sidelines right now and you can hear my voice and you need help, ask for help. Let me help you. If you are so thin-skinned and fragile that you can't handle the feedback, send me a chart. Email me. Email me a chart. Go, Mark, I'm terrified to post in that room, but will you look at this? My answer will be yes. If I see a 1 on my text messages, I have to respond. That's just me. But here's the deal. Don't send me 50 charts if you're not willing to participate in class. Send me 1. Tell me your plan. Let's see what we can do. All right, guys, that's it. Let me get